area. There's another area I can't remember right now. But what's driving this debate, as Dr. Adelja told us yesterday, is hospitalizations.
Do you think that's good policy, being outcome-based on something like this and not forecast-based?
Welcome to America.
We'll have that conversation with John Hopkins.
We did that with the moon, with our space coverage, John, the other day. You saw that as Jeff Bezos mentioned Yuri Gagarin. We're outcome-based.
Nouri Arabini, the CEO of Arabini Macro Associates. No idea, Tom. I can tell you the Fed decision's coming up a little bit later with a news conference as well. From New York City this morning, good morning, alongside Tom Keene and Lisa Abramovich. It will be a Bezos-free Federal Reserve decision day.
There we go.
Is that good news for some people? On the S&P, unchanged. This is Bloomberg.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio. Wednesday, the Fed decides. How worried are they about inflation? What will they signal about tapering? Coverage begins at 1:30 p.m. Eastern on Bloomberg Television and Radio.
Live from New York City for our audience worldwide, good morning. Good morning to you all. Here is your Wednesday morning price action. Equity futures on the S&P unchanged, on the Nasdaq advancing about 0.1%. On the Russell, some outperformance there by 0.52%. This following some big earnings from big tech after the close yesterday. And this is how we're performing going into the opening bell. Switch up the board and get to the pre-market moves of the likes of Apple, Alphabet, and Facebook as well, who will report after the close a little bit later. This is Apple. This is the story right now. Negative 1.38%, Alphabet advancing almost 3.9%, or Google, as Tom would like to call them. I share Tom's view. Google is up by 3.9%. Those two names, I think, frame the conversation for the Federal Reserve almost perfectly. There is fantastic cyclical demand in this economy, robust demand in this economy, terrific demand. Just look at the ad revenue at a place like YouTube, up by 84% year on year. That stock's up nicely off the back of it. Then you've got Apple warning about deceleration and slowing growth and supply chain constraints that could persist, maybe longer than you anticipate. That stock down by 1.38%. That is the debate that will take place right now at the Federal Reserve ahead of that decision a little bit later. And the reason why a lot of people still think this Fed will take a punt. They won't really do much at all a little bit later. We'll talk about that a little bit later. Switch up the board and get to the bond market. 2s, 10s, and 30s. Last time the Fed met, we were in at around 150 on 10s. Right now, 125.43. Yields up a basis point on the day. Yields on 30s, Tom, 190.85. Fact of the matter is, Tom, yields are lower, the curve is flatter since that Fed met, even though they made that very gradual step towards tapering last time around.
That's very important. Just out, Tom Forty, he will join us later from D.A. Davidson on Apple. He goes from a responsible 167 to a new adjusted target of 175, below many, but nevertheless, Mr. Forty will give us perspective on technology here in a bit. Right now, and this is a joy because he is retired from New York University, where he provided shocking value over 2 decades. Nouriel Roubini is a little busy. He's writing a book that will do better than good. The movie rights have already been sold before the book's been written. With Macro Associates and co-CEO of theboombust.com, Dr. Roubini joins us this morning. Nouriel, I want to go right to the heart of it. You say it differently than Lawrence Summers. We have stagflation. We also have debt on top of it. You're looking at your stagflationary debt crisis. Is it here?
It's on its way here. I agree with Ray Dalio, I agree with Larry Summers and many others who worry that they're going to be overheating because we have a loose monetary and fiscal policy, and that could lead to inflation. But I have a second worry and a third worry. The second worry is that in addition to aggregate demand becoming excessive, we're going to suffer supply bottlenecks. And those supply bottlenecks are not the short-term ones driven by, say, unemployment benefits. I've identified 9 forces that are much more secular, that like in the 70s represent negative global supply shocks that reduce potential growth, increase the cost of production, and with loose monetary and fiscal policy can lead not only to inflation, but also to stagflation, a combination of inflation and recession like we had in the 1970s when you had 2 oil shocks. And on top of it, compared to the 70s now, debt ratios, private and public, are much higher. So at that time when the Fed went and fought inflation with Volcker, we had a severe double-dip recession, but we did not have a debt crisis. After the GFC, we had a debt crisis, but we had low inflation because there was a negative demand shock. So we could have the worst of stagflation of the 70s and worst of a debt crisis like after the GFC.
Nouriel, I want to go back to your Istanbul in the old world. I want to go back to Genoa and Venice when John Farrow's ancestors were doing battle with the huge industrial changes of that time, the 14th century.
Just for the record, they were in Sicily, Tom.
Okay, well, same thing. That's just out there. Carry on, please, down the Adriatic. Nouriel, we have seen over time historic change. How does America do secular stagnation when we have a tech juggernaut like we're observing right now with Apple, Amazon, Google, and that? How do we bring their excellence over to the American experience?
Well, even Larry Summers, who was worried about secular stagnation, now worries about inflation. The trouble is that we're facing a whole problems from a political point of view in terms of a gridlock, not just in the US, but also in other parts of the world, because there are lots of people who are left behind, and whether they're voting for Trump or they're voting for Democrats or voting in Europe for populist party of the right and the left, they're against globalization, they're against technology, they're against hyper-digitalization. But we also live in a world in which, as I pointed out, I worry that in spite of technology, maybe as it has been in the last 20 years, a force for deflation, there are other forces that are going to be stagflationary. They're going to be reducing potential growth and increased cost of production. Because of inequality, we have deglobalization, where protectionism and everybody wants to defend their own firms and workers, we're going to now see balkanizations of global supply chains and the reshoring of manufacturing from low-cost China to US and Europe. We're now having aging of population, not only US, Europe, advanced economies, but also in key emerging markets like China, Korea, East Asia, Russia. We're restricting migration now increasingly from south to north. And migration was something that kept a lead on wage pressures in advanced economies. We're going to have this decoupling between US and China because of this Cold War becoming colder. There's a risk of a hot war. Decoupling on technology, on trade, data, information, the internet, financial flows. Global climate change is also stagflationary. Look at what's happening with lack of water, even in California. 1/3 of all vegetables, 2/3 of all fruits and nuts are produced in California, and now they don't have water, and the farmers who have water rights rather sell it for something else. We'll have a shock to, say, food prices. Pandemics that are going to recurring or imply self-reliance of countries on their own domestic supply. Cyber attacks are leading again to disruption of production when they occur, or the firms will have to spend hundreds of billions of dollars to try to reduce the risk of cyber attacks, and that's going to be another cost.
Nouriel, there's so much to get through. Just get to the final point if you can, please.
Against inequality, and the policies are going to be pro-worker, pro-union, pro-wages, and so on, and that's going to put upward pressure on wages.
Right.
I knew I wasn't going to be able to cut you off there because you were in full flow. Nouriel, just take a breath just for a second.
Yeah.
Just want to frame what you're saying because I think it's so important. You're making a supply-side call on the economy here. A lot of people believe that we'll get this supply-side response as the year grows older, that people will start to come back to the workforce from September onwards. You're saying that's not going to develop in the way people anticipate. Can we put some numbers on this, Nouriel? The participation rate in America, the degree to you think it will recover, things like that. Just work through it with us.
Well, you know, I do believe that there are some short-term supply bottlenecks, and maybe in the labor market, unemployment benefits, the lack of childcare, the fact that schools have not reopened may have led some workers not wanting to return to the labor market and put upward pressure. But in my view, even when those short-term factors go away, I just described 9 factors that have nothing to do with the short term, have to do with the medium term. Each one of them is a negative supply shock and is a medium term. In particular, the last one, this backlash against inequality implies that in the past, we didn't have the protection of labor. But now look at we had $3 trillion last year care program of fiscal stimulus, then $900 billion in December. The first Biden plan, $1.9 trillion, went mostly to what? Workers, unemployed, partially employed, those left behind. Rightly so, because there is so much inequality, you cannot do otherwise. But that put the labor in a situation of strength. Right now, given the massive transfer, you can afford waiting longer before you get a lousy job or a burger flipping job. And that tilts the balance of power between labor and capital. And redistribution is going to be not like in the past from labor to capital, but from capital to labor.
Let's pick up on that point, Nouriel.
Those are medium-term trends.
This is really, really important. Lisa, this shift away from capital and the leverage shifting towards labor, that's a huge effort of this administration, and they're pretty open about it.
Yeah, and the idea here is that the Federal Reserve perhaps isn't helping things along. Nouriel, we just have about a minute left, and I'm wondering what the Fed can do in this circumstance that's driven by so many other factors, whether it's supply bottlenecks or rejiggering of the labor market. What can they actually do to forestall this stagflationary push?
Well, my view is that the Fed, like other central banks, are in a debt trap. Them if you do and them if you don't. Because if I'm right about overheating and stagflation, they should be tightening policy sooner and get out of tapering right now to avoid inflation getting out of control. But if they were to try to do that, given the stocks of debt that are much higher now than 10, 20, 30 years ago, private and public, then you'll have a crash in the bond market, a crash in the debt market, a crash in the stock market. You're not going to have a double-dip recession like the early 80s. You're going to have actually a depression. And between doing that and the latter choice of keep on monetizing large fiscal deficits and letting inflation gradually rise, the latter choice is going to be by default the one they're going to choose, and therefore inflation is going to come back, and then stagflation is going to come back. So it's not as if the Fed is evil. We are in a debt trap. We're not just in fiscal dominance. Today, we're in a debt trap because both private and public debt are excessive, and each central bank is trapped. And they're not going to be able to exit this unconventional monetary policy because the markets and the economy is going to crash.
This has been so depressing. I always have to tell everybody that you're actually a really happy guy. I always have to tell everyone after the interview's concluded that Nouriel usually smiles, Tom. He's a happy guy, away from these interviews.
I'm a happy guy, but I'm realistic about the future.
I know that. Nouriel, it's good to catch up. You sound like Lisa. Come back soon. It's good to hear from you, sir, as always. Great to have you back in New York. Nouriel Roubini there, the CEO of Roubini Macro Associates and the co-CEO of boombust.com. Tom, a really important argument that Nouriel's developing here that I think we should spend a little bit of time on. Just pushing back against this idea that the supply side of the economy will respond. He thinks there are some constraints here that will persist.
The constraints are there, and what's so important about the controversy over the secular stagnation debate is we're living it in real time, John. And again, I'm going to go to the Fed meeting today. Never have we been more ex post than we are right now, including our interpretation of a slowing America.
Can you imagine Nouriel and Lisa walking into a bar? Can you just picture the scene?
We'd be laughing. We'd be happy. And then we would discuss the worst case scenarios for the world.
Depression era.
We're looking round corners. Leave us alone. From New York City this morning. Good morning.
Venice.
Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. On this Fed decision day, your equity market unchanged. This is Bloomberg.
With the First Word News, I'm Laura Wright. A House committee investigating the attack at the Capitol could subpoena former President Trump's top allies. In the first public hearing, members of the panel made it clear that the former president's activities on January the 6th are a central focus of their probe. Yesterday, they heard dramatic testimony from 4 police officers who helped defend the Capitol. Congress is going to back the mask. The Capitol's attending physician has reimposed a mask-wearing requirement for all lawmakers and others while they're on the House floor. Violators can be fined. 2 House members and several staffers have tested positive in the last few days. Bloomberg's learned that Credit Suisse gets ripped in an internal investigation into the Archegos Capital scandal. The probe said that the Swiss bank failed to properly monitor tens of billions of dollars of exposure that piled up while handling trades for Archegos that generated little revenue. Credit Suisse lost about $5.5 billion in the Archegos collapse. At the Summer Olympics, U.S. gymnast Simone Biles won't defend her title in the individual all-around final competition. She withdrew from the event today, a day after she pulled out of the team final. According to USA Gymnastics, Biles will focus instead on her mental health. The organization says she'll be evaluated daily to see if she will take part in next week's individual event finals. Global news 24 hours a day on air and in Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The biggest debate happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we're trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
City Council President, together with her colleagues on our City Council, are moving forward with requiring city employees to be vaccinated, starting with a requirement that they report their vaccination status or submit weekly proof of a negative COVID-19 test.
Los Angeles Mayor there, Eric Garcetti. There's a shift from New York City this morning. Good morning. Alongside Tom Keene and Elisa Abramowitz, I'm Jonathan Ferro. On this Fed decision day, here's the price action for you. On the equity market, on the S&P 500, advancing 3 points, up by 0.06%. Yields are higher by about a basis point, Tom, to 125.27 on 10s. And euro dollar just slightly negative. Weaker euro here, 118.05.
Interesting data here. I'm going to call it a stew as we go to the Fed meeting. Look for our special coverage this afternoon. Right now, and this is a joy, out of Edinburgh, and of course, a prestigious residency at the University of Chicago in emergency medicine. But far more, Bhakti Hansadi of Johns Hopkins has done the world tour of really difficult diseases. When you show up in Ghana, when you show up in Nepal, well, it's a different medicine than what we have in America. Dr. Hansadi, welcome. What comes after the Delta variant? Virology 101 told me these things keep changing. Does a pro like you look at the Delta variant as a pathway to what's coming down the road a year or 2 years out?
So unless we decrease the amount of circulating virus, yes, it is likely that the virus will continue to mutate, and there'll be an echo, a lambda, and future variants that will be more transmissible, more virulent than those of their predecessors.
So then how do we approach that? I mean, from a medical basis, we're working on vaccines. What do you want from our politicians within the chaos we have right now?
Sure. So within the chaos that we have right now, it is about decreasing the amount of circulating virus. And so that is a public health challenge, and that can be overcome by vaccinating individuals. So that's what we need from our politicians. We need to promote vaccines, decrease transmission of the virus, decrease the amount of circulating virus, so future variants of concern are slower to evolve.
And certainly for the path ahead, one certainty will be vaccinations, and that will be ongoing, at least the push to get them. Just want to bring you this news that Pfizer actually reporting earnings blowing all estimates out of the water. Full-year COVID vaccine revenue is estimated to be about $33.5 billion versus the prior forecast of $26 billion. That's the medical side. That is the response that health officials want. But Dr. Hansadi, the concern here is how long are we going to have to mask, unmask, remask, based on whatever variant, based on changing scientific evidence versus being able to say, we're done with the pandemic and we can move on?
Not until we get to a point where we decrease the transmission of the virus. And, you know, vaccinations will prevent transmission of the virus because they'll decrease the likelihood of people getting sick and circulating that virus. The other thing is that there may still in the future pipeline be therapeutics which can stop the reproduction of the virus and cure people of the illness before they're able to transmit to others. So, you know, I think the mask, yes, it's frustrating, but the only way to protect those who are unvaccinated or cannot mount an immune response is for us to continue to go back to what we know works, which is masking.
Yeah, but how much has the administration undermined its credibility by giving one bit of guidance a week ago and then completely flipping it on its head this week with a set of recommendations that, by all measures, seems pretty confusing?
Sure. So maybe if I flip the dialogue slightly here, right? I mean, on one hand, we think, okay, if the data was the same a week ago that it is today, then yes, that would be undermining their credibility. What we're actually seeing is responsiveness to evolving data. So on July 1st, I think the US had around 11,000 daily COVID cases. Today, it's around 63,000. Now, that is an exponential rise. And we were not expecting anybody that transmissibility would be so high to the point that multiple counties across the country would be determined as high transmissible or substantial transmission counties.
Stay on that chart. On radio right now, we're showing flags for boys. It's the number of countries, 10 countries, that have resilience rankings. The United States is listed 5th. It's a pretty little chart. Dr. Hansadi, every pandemic is the same. And I would suggest my reading of Camus, or actually scientists like you, is all we do is end up isolating socially the unvaccinated, the people rebelling against science as well. Is that where we're heading? We're just going to isolate the unvaccinated?
That is not the society that we can live in, right? We cannot isolate over 40% of our society. That's just not how it works. We have to rally, get on the same page. But also, we talk about the unvaccinated. Remember, there is a substantial number of folks who have underlying medical conditions that cannot mount an immune response. There are medicines that suppress their immune system.
Doctor, just quickly, just want to clear something up. Tom has a child at home who's unvaccinated. Lisa does too. I do not. Do we have to wear masks? Who has to wear a mask and who does not have to wear a mask in New York City at the moment?
You all have to wear masks. The best thing I heard this week was be vaccinated, act unvaccinated. But each of you can take home the COVID virus to your child, whether you're vaccinated or not. Your child is unvaccinated and thus has a chance of getting sick and transmitting it to others.
So that's
I
Lisa
have
and
two
Tom
unvaccinated children.
What about me, doctor? Unvaccinated and rather vaccinated with no children at home. Do I have to wear a mask as well indoors in public spaces? What am I meant to do? What's the guidance? Not what you think. What is the guidance right now?
The guidance is in indoor public spaces in areas of high transmission, you need to be wearing a mask, irregardless of your vaccine status.
There we go. Thanks for clearing that up. Doctor, thank you. Dr. Bhakti Hansati, Johns Hopkins Associate Professor of Emergency Medicine. Tom, I think a lot of people still this morning very confused about that, about what they should and should not be doing, depending on where they live.
Yeah, I absolutely. And I think the maps speak volumes in that this is not a national issue. It is hugely regional, and within any geography, like the 5 boroughs of New York City, there's certain places where it's really under stress and others where it's not. And on a societal basis, how do we deal with it? Whether it's the Lieutenant Governor of New York, who we talked to repeatedly in the heat of the pandemic, or Dr. Hansadi, The answer is get vaccinated. I hear no other solution.
Some big numbers coming out from Pfizer. Lisa, do you want to go through them again?
Yeah, just to give you a sense of the COVID-19 vaccine revenue that Pfizer is posting. They are expecting $33.5 billion of revenue from the COVID vaccine versus the expectation of $26 billion earlier in the year. Earnings per share they saw as being about $4, $3.95 to $4.05. That's up from $3.55 to $3.65, beating estimates. I mean, across the board, beat. And this COVID vaccine really driving a significant part of this. Of course, John, that will drive a discussion about what the public health good is, who's paying for that, et cetera. But nonetheless, definitely showing that they can ramp up production with the manufacturing of about 3 billion vaccine doses by the end of December and make money from it.
Important to point out that's a COVID revenue number, a vaccine revenue number, and not a profit number. Not that you said a profit number, you said a revenue number. I just want to make that very clear because a lot of people already writing to me and talking about they are huge profits, 33 billion. That's a revenue number, just to be clear about that.
No, it's good to point out, and I will say this will be an ongoing debate, especially as the variants continue to creep up.
Without a doubt, Elisa Brabbits, Tom Keene, Jonathan Ferro, Equity Futures, positive 2. We're basically unchanged on this Fed decision day. The coverage for the Federal Reserve ramps up in the next hour. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y-12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance and more.
2022年完成空间站的在轨建造，建成国家太空实验室。之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station. China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
For the people here on Earth who are wondering why are we investing all this money in space, this time in space, talk to us about how you believe this will actually help benefit us here on Earth.
We're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The Billionaires in space?
What defines going to space?
There is a level where you
It's
get
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
Growth is going to slow. To some extent, that's a bit inevitable, though.
It's important to keep in mind that this cycle has basically been proceeding, very, very fast.
We're already in that decelerating upward revision pace, and about half the sectors are contributing to that right now.
This kind of economic strength, while it bodes very, very well, doesn't necessarily mean that corrections don't happen.
The reality is we're going to continue as an economy and globally and domestically to deal with the pandemic.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Chairman Powell just a few hours away from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market positive too on the S&P 500 up 0.05%. Tom Keene, a Fed decision and Chairman Powell news conference just hours away.
Well, the decision is there, and it's going to be interesting what he's going to do. I would say, John, it's medical, first do no harm, and that's going to be the thrust of the press conference. But what's interesting is the pandemic Delta variant worries there versus a corporate America that is adapting and adjusting. McDonald's out moments ago. The comp sales numbers are really not legitimate, but they're showing the same thing. We're seeing company after company. We're seeing margin resilience that's just unreal.
Sales up 40.5%, slight upside surprise, Tom, the estimate 38.7. You put it together with the numbers we saw yesterday afternoon after the close, Tom. Those numbers from big tech, big money in a big way.
And what's so important here, and one of our themes, and with Bob Dahl coming up, it's perfect to advance forward, John, is how do you extrapolate out this corporate excellence within a boom economy, or do you discard that and start worrying about this, worrying about that? Each one in radio and TV will have to figure that out for themselves, but that's the debate here.
I mentioned it a little bit earlier. Lisa, let's do it again. I think for the likes of Apple, it really underpins some of the fears that people have. Decelerating growth, supply chain constraints persisting, then the likes of Alphabet just knocking it out of the park, really speaking to that robust demand that exists in this economy, reflected by what happened with YouTube, with ad sales up by more than 80% year on year.
Yeah, and as you said earlier, it's really ramping up the pressure for Facebook, which reports after the bell. There is a question here. How much is this an expected cyclical shift, and how much is this consolidation of market share, frankly, in ad revenue spending, or just in general of market prowess by these big tech giants?
Tom, what do you make of that after the close today? Is the bar a little bit higher for the likes of Facebook?
Yeah, well, no. I think they're just going to report what they report. Let's guesstimate that it's like the others as well. What they've clearly displayed and what Facebook will display, John, is the idea they can adapt and adjust. We've been talking on this show about this for weeks and weeks. Frankly, Gina Martin-Adams has led with her great analysis at Bloomberg Intelligence. Every single sell-side report, including Tom Forte price target up on Apple, is the same. Surprise. They've adapted. Margins are sustained.
Facebook up by 1.5% of the pre-market. One to watch after the close. Let's get to the price action this Wednesday morning. Good morning to you all. Your equity market on the S&P 500 basically unchanged, advancing a single point, call it 2, up by 0.03%. Outside of that, into the bond market, Lisa, yields higher by almost a basis point at 125.10. Euro dollar negative a tenth of 1%. Euro dollar, Lisa, 118.05.
All right, we've been talking a lot about the events to be watching, namely the Fed and some of the big tech earnings. 11 a.m., I am very interested to hear what Gina Raimondo, the U.S. Secretary of Commerce, has to say. She has an exclusive interview on Bloomberg Television. Key questions for her. What do we need to fill the labor shortages that we're seeing? How do we explain the frictions? How much do we need immigration, frankly, and to restart some of those programs? Really coming at this crucial time, especially ahead of the Fed, when we see the fact that people are not getting back into the workforce quickly enough, that participation rate stubbornly low. At 2 p.m., the Fed rate decision does come out, and then the 2:30 p.m. expectation for Fed Chair Powell to deliver some guidance on when they might start talking about tapering, some guidance about how they're looking at inflation. And I want to just point out, we're talking about earnings. 87% of S&P 500 companies that reported earnings in the month of July have mentioned inflation as a key factor in their business models going forward. This is not being reflected in market action or by the Federal Reserve. This dissonance right now is really causing a lot of angst. Who is right and how persistent is this? What are the longer-term ramifications? After the bell, Facebook reporting earnings. Key question for them, can they meet, as you said, John, those higher expectations based on what we saw out of Google, out of YouTube? The ad spending is coming back in force. Is Facebook capturing as much of it as people expect?
Google stock up by more than 50% year to date, Tom.
Well,
coming into today.
I'm
Just
glad you mentioned that. Yeah, I'm really glad you mentioned that because I think it's deceptive, John. Google didn't really pop it last year. And so to me, it was the others had a huge year last year.
Yeah.
And now Google's making the pop this year to catch up. Where will they be next year? That's a different debate.
The cyclical story, the ad revenues really kicked in a massive way. Big tech delivering some big money.
You
Let's get to Bob
mentioned YouTube.
Dole, Crossmark Global Investment Chief Investment Officer. Bob, I mentioned YouTube. Revenue up by more than 80% year on year over at YouTube, just one unit of the overall company that is Alphabet. Now, Bob, I just wonder from your perspective, how difficult is it to tell a client, yeah, we don't own them. We don't own those names?
I'd be in a disappointed situation if I had to tell my client that. Thankfully, we do. But I get the question is, what happens from here? And you've all been alluding to it. That is, we're having amazing corporate earnings in the second quarter, but almost definitionally in the back half of this year, earnings growth is going to decelerate. Markets love when economic and earnings growth accelerate, not so keen on deceleration. The numbers will still be good, as you folks know, but not as good. And then you bring in all the other factors like is inflation transitory or not, and I think it's just not as smooth a ride. It's not straight up. It's bumpier from here.
Bob Dole, at Crossmark, the game is to extrapolate out with a vision out 1 year, 2 years, 5 years, 10 years. We talked to the great Steve Auth about this in the last hour. Give me the courage of Robert Dahl right now. How far out are you looking to believe in the extrapolations of Apple, Amazon, or for that matter, McDonald's?
Yeah, a lot of it has to do not so much with the companies are doing. They're doing great. They're adapting, to use the words you all been using so far this morning, and that's good news. The problem is what happens to the valuation, the multiples, if and as, and I think it's as, interest rates creep higher. That's the trick. The company's businesses are good. They're solid. They're coming back. They've figured out how to adapt in a slightly different world than we've been in. So it's more about valuations than can the companies execute.
Bob, what are the scenarios that you're looking at that could actually cause that to happen, that for interest rates to finally creep higher as so many expect?
Well, you alluded to it a minute ago, Lisa. Inflation, is it transitory or not? My guess is some is, but not all of it. So we have some inflation that's transitory, some that's caused by supply shortages, which hopefully get fixed before too long, but some is real. The era of 0 to 2% inflation, in my view, is over. And as a result, we're going to have to get used to a little inflation. Not high single digits, but enough that there's a different valuation parameter. So far, the markets have not agreed with that. The markets have said inflation's transitory, 10-year treasuries at 125 is A-OK, and PE ratios where they are. We'll see if that continues. I hope I'm wrong. I hope inflation is totally transitory, and then it'll be onward and upward.
Let's say you're right. Let's put some numbers on it. You said not high single digits. What are you looking for, Bob? Something like 3, 3.5, those kind of levels to persist? And if that's the case, what do you want to own in this equity market?
Yeah, I think it's 3-ish, or let's call it 3-ish as opposed to, 1 to 2. That doesn't sound like a big difference, John, but you know it is when it comes to valuation and interest rates. So where do I want to be? I think the counter trend move has been higher bonds, lower yields, growth stocks, defensive stocks. That's counter trend. I think you use that period we're experiencing now to beef up on your cyclical exposure. You trim duration if you haven't already done it. The U.S. and increasingly the global economy is in pretty good shape. We're going to get good economic news, good earnings news, and a little bit of inflation. which to me means slightly higher interest rates.
What's the frothiness now, Bob Dahl? The exuberance? I mean, is this a legit bull market, or is it still unloved?
Oh, it is legit. You know, the sentiment numbers have moved up significantly. They're not in onerous territory, but we've got to keep our eye on it.
Yeah.
Look, I think that part of the argument is the Tina argument. If I want to get out of stocks, where am I going to go? Cash doesn't give me anything. Bonds, I think, are risky. And so in traditional asset class, I just stick with my equities.
Final question from me, Bob, just quickly. I've asked a couple of people this question over the last couple of weeks. I'll ask it of you. What do you want to own into year-end, the NASDAQ or the Russell? Where would your preference be? Which index?
The Russell into year-end, more cyclicality there, and lower valuations compared to the NASDAQ.
Interesting. Bob,
So can we put out a banner that Bob Dahl says sell Apple?
I don't think we can do that, Tom. I think we can say he says own the Russell. That's all.
I still own Apple, just less than I used to.
Tom Keane roulette is always tough. Bob, thank you. Bob Dahl, Crossmark Global Investment Chief Investment Officer. Tom, you do worry some people sometimes.
John,
you do know that.
These guys, Steve Oth, Bob Dahl, David Cost, and the rest, Ben Laidler, you know what? They're in the game. They're participating. Yes, they're winning right now. But when all hell breaks loose and the VIX is 30, Bob Dahl is going to be there saying, acquire shares.
And when you ask that very simple question, what would you like to own? The NASDAQ or the Russell into year-end? The answer to that, Tom, tells you a lot about their view of the world and the underlying economy. Really speaks to a lot.
Well, there's two ways to go here. One is fine. You can sell one and buy the other. But the Venn diagram approach, where you overweight Russell, if that's your belief, is one way to go, like John Golub did early in the year. He said, you got to own them both.
Russell outperforming this morning. The small caps, Lisa, up 0.6%.
And I would argue that actually the earnings that we got after the bell yesterday seems to edify this idea that cyclicals could potentially get another wind versus the classic big tech and the classic NASDAQ. The idea here that ad spending is picking up. The world is returning, and that seems to be what's getting money.
Alphabet's doing well, so the world is doing well.
I'm not saying, oh my God, we don't do nuance very well.
No, we don't. We know that. But Tom and Bob Dahl.
I know.
Tom's saying, Bob's saying, drop Apple.
Yeah. Sell everything.
At 8 a.m.
I'm just trying to create some excitement around here.
Bianca Bernstein, Private Wealth Management, co-head of investment strategies. One thing I know for sure, and I don't know a lot for sure, but one thing I know for sure is there is not tang in that cup. On the S&P, up 3. We advanced 0.6%, 0.06% to be precise. From New York, this is Bloomberg.
With the First Word News, I'm Laura Wright. Federal Reserve Chair Jerome Powell and his colleagues are likely to emphasize patience today on scaling back the central bank's massive policy support. Policymakers are almost certain to hold interest rates near zero at the end of a two-day policy meeting. The Delta variant is seen as giving Powell another reason to be cautious. Stocks in China and Hong Kong halted a three-day sell-off. State-run media tried to reassure investors shaken by the government's regulatory crackdown. Traders fear the latest moves against education, tech and property sectors could expand to other industries. The British government is about to end the quarantine for visitors from the US and the European Union. That's if they've been fully vaccinated. Instead of isolating now, those travellers would have to take COVID tests before leaving for the UK and after they get here. Pfizer has significantly increased its forecast for COVID-19 vaccine sales. The drug maker now says it expects the shots to bring in $33.5 billion this year. The previous estimate was $26 billion. Pfizer also raised its earnings forecast. At the Summer Olympics, US gymnast Simone Biles won't defend her title in the individual all-around final competition. She withdrew from the event today, a day after she pulled out of the team final. According to USA Gymnastics, Biles will focus instead on her mental health. The organization says she'll be evaluated daily to see if she will take part in next week's individual event finals. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
I've always sort of pictured what it was going to be like. I mean, you know, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, 2 kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many, many people to be able to go up who could never have dreamt of going to space.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
What the Chinese government is now doing is cracking down on the big companies that dominate various sectors at the exclusion of smaller companies. So the regulatory crackdown is probably, in the long run, going to be good for the Chinese market.
That's the long view from Mark Mobius, the Mobius Capital Partners co-founder from New York City this morning. Good morning, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Here's your equity market on the S&P up 2, advancing 0.04% on this Fed decision day. Yields are much, much lower. The last time around we said this Fed decision day, we opened that morning close to 150. Right now, 124.93, Tom. 6 weeks to 8 weeks, a long time in this market. Yields higher by about a basis point on the day.
Well, your observation from 150 into 125, John, speaks volumes about the new low yield. And the real yield, which we haven't even talked about today, I'm sorry, John, we sustained a 5-year real yield negative 1.93. That's got to be unspoken, but in the back of the chairman's mind today.
So how do you think it changes the conversation at the Fed today, Tom?
The conversation today will be overwhelmed by the pandemic. I'm sorry.
They can take a pun. That gives them the space they need.
They've got 6 weeks. Let me bring up the famous FOMC Bloomberg terminal function, folks. I use it nonstop. I have no clue what I'm talking about here. I just make it up. September 22, John. September 22.
Breaking news.
Maybe they get back breaking news.
Exclusive.
Yeah. It's a exclusive surveillance special. John, September 22 is what matters.
The next one.
The next
after
one.
this one.
Yep.
After Jackson Hole.
He's been taken over by the Delta variant and obviously getting.
We actually did a survey on that, Tom. And Lisa, I know you've gone through that survey too. And September seems to be the landing point for a lot of people, a lot of economists in this market.
Yeah, if you take a look, actually in September, 43%, just to give you some numbers, of economists surveyed by Bloomberg expect that in September we will get tapering rhetoric. I do wonder, though, how much of a pass, Tom, the chair has based on the Delta variant.
You're giving numbers as opposed to our colleague.
I mean, I could make it up too.
Thanks, Lisa. Just good to know that Lisa doesn't make it up too, Tom.
Yeah, right now, someone who knows all the facts, Emily Wilkins saves us with Bloomberg Government in Washington. Emily, Speaker Pelosi is trying to not do a John Boehner. Nobody talks about Senator Schumer and his leadership of a Senate majority doing a John Boehner. Does Senator Schumer have the troops behind him?
He's working to get them there. I mean, look, let's be real. At this point, we don't have a bipartisan infrastructure deal. And even as that's coming together, we're hearing other Democrats in the conference raise concerns. We don't have any sort of budget resolution, which we're going to need for that budget reconciliation. We keep hearing about details and details and details to work out. Obviously, Senator Schumer's got a difficult job because he can't afford to lose any single one of the 50 Democrats who are with him here. But I mean, he keeps talking about a timeline. He initially wanted to get this all done by the end of July. Tom, there's no way that's going to happen right now. And I think we're going to see right now is just a huge test of whether or not Majority Leader Schumer can rally, in fact, the troops behind him.
How is that test affected? Is it one vote? Is it a vote out in a week or two? Or is it sort of like chit-chat as they go to the Sunday talk shows?
To a certain extent, we are looking at sort of a longer timeline here as far as what actually gets done. Right now, the big push is on that bipartisan infrastructure package, but you just can't forget that budget reconciliation package as well, that $3.5 trillion, because Speaker Nancy Pelosi has said that she's not going to move on that bipartisan infrastructure deal until the reconciliation package goes. So Senator Schumer really needs to make sure that they are turning out both of them. We are still waiting this week. I mean, at this point, it's Steve Rossetti with the White House and Rob Portman with Senate Republicans who are doing the negotiations, and it's going to be sort of down to them to figure out whether or not they're going to be able to move forward or whether Democrats might just have to go it alone on infrastructure.
Emily, forgive me, but when I hear about the negotiations, sometimes I hear those parents from the Peanuts cartoons where it's wah, 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 because it seems like we've been having the same discussion over and over again for months. Is it actually crunch time? What happens if they don't get a deal before the August recess?
It's crunch time because we're about to go ahead into, as you mentioned, the August recess. The Senate leaves the week after next. And there's nothing that motivates Congress like not being in Congress. They don't want to have to spend their August recess in the Capitol working out a deal. And so that sort of creates a bit of a natural deadline. I mean, we have seen the talks evolve in a certain way that now it's just between two individuals. Think of how some of the COVID stuff got done, right? That was also White House Steve Mnuchin versus Nancy Pelosi, the two of them coming together and making a deal. So we have seen this formula work in the past. Obviously, these are two different individuals, so we're going to have to keep an eye out here. But yes, Lisa, trust me, I'm very much with you on this. Every day at the end of the day, I'm just like, man, I'm going to go on surveillance tomorrow and tell them that negotiations are still happening. But this is how the process works in Washington, especially when you have very, very low margins.
You already know that we're going to be like, what? What's the import of this? Emily, just to shift gears a little bit away from the wah, 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 wah of these negotiations.
That was nice.
Thank you. I appreciate it. Let's talk about the mask mandate and some of the political response to that. Former President Trump actually weighing in and saying unmask the children, sort of coming out negatively to this recommendation by the CDC. What has the Republican response been, especially given the fact that the regions that are more heavily Republican have seen higher waves of infection from this Delta variant?
So far, the Republican response has not really been to embrace this new mask mandate or some of the vaccine mandates that we are starting to crop up in various parts of the government and companies. Last night, we saw a tweet from Kevin McCarthy, the Republican leader in the House, responding to the fact that the House will now everyone's going to need to mask up again. And he's immediately said that this is a political game. This has sort of been politicized throughout. And I think it's going to sort of continue that. There are a number of Republicans who I spoke with yesterday who said, look, we're vaccinated and we're frustrated that now we're being told that we need to redon a mask again. At the same point, the CDC is saying, look, Delta variant is more infectious than the previous one, and this is something we're going to need to do.
Emily, suspect. I thought it was an unprepared interview, but I try tomorrow as well. Emily Wilkins in Washington, John Farrow preparing for, she prepares for our interviews.
It's good to know, isn't it? Emily, thank you. Thank you very much. Prepare for this. This from Pfizer. Tom, to launch a study of a Delta-focused vaccine in August. They've just shared plans for a new COVID vaccine formulation in some slides. The first batch of the Delta-focused COVID shot has already been made. And I don't think this will be a surprise to many people, Tom. This is set to become a yearly event in the same way things like the seasonal flu are a yearly event.
Exactly. Why should we be surprised? This is called medicine and science, and you know the timelines are real. I'm like Lisa. I'm like, let's go under 12, under 12, under 12. The head of pediatrics at Boston Children's Hospital was adamant in his conversation with us.
Yeah.
It takes time with children. Same thing here.
Pfizer 41.80, down about 0.7%. We're just working our way through the earnings this morning. This came from Joe Weisenthaler. Shout out to Joe, who just put this out on Twitter. McDonald's. Sales in the US versus 2019, this is important, up nearly 15%. In the rest of the world, they are hardly up at all. Just the 2-year comparison there, Tom. US looks good. The rest of the world's pretty flat.
Well, that's the virus. You know, I'll go the same thing. Indonesia, India, and on and on.
More earnings still to come. Facebook after the close a little bit later. Before we get to the Fed, we've got to catch up with John Riding, Bring Capital Chief Economic Advisor. We'll do that shortly. Your equity market looks like this, up 2 on the S&P 500, advancing 0.05%. Your bond market just a little softer, yields a little higher, up about a basis point on 10s to 125.27. With Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. This is Bloomberg Surveillance.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Went up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astercoma carinata.
I nailed it.
It's not thera, whatever. Astercoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Live from New York City for our audience worldwide on TV and radio. Here's the price action this Wednesday morning. On the S&P 500, futures positive 3. We advance almost 0.1%. We advance on the NASDAQ by 1/3 of 1% after receiving about 1/4 of the NASDAQ 100 in earnings in market cap after the close yesterday. The likes of Apple, Microsoft and Alphabet. And let's talk about Apple and let's talk about Alphabet just briefly to frame the debate for the Federal Reserve. Demand is good. The revenue, the ad revenue from Alphabet speaks to that. Supply chain constraints, they might persist. Growth will decelerate. Apple earnings and the forward look speaks to that. That's the issue for me right now. We can talk about it a whole lot more a little bit later. What has changed for the Federal Reserve? That debate hasn't changed too much. What has changed for the Federal Reserve in terms of this market? Well, let me tell you. The last meeting feels like a long, long time ago. We closed on June 16th. At 42.20. We closed yesterday at 4,400. That's the equity market. This is the bond market. 10-year right now, 125.27. We closed on June 16th, 30 basis points north of that at 157. And we can do this with the Treasury yield curve as well. Switch up the board and get to that. I'll show you the curve. 2s, 10s. Looks like this at 104. We closed on June 16th at 136. So, Tom, the equity market last time around was lower. Yields were much higher, and this curve was much steeper. A lot has changed since that last Fed meeting.
Yeah, Nora Rubini talked about it here, the idea of a stagnation within the boom economy, the complete mystery, John, of Q3 and Q4. We'll flesh that out as we go through the morning and with the coverage this afternoon.
That's the bond market, 2s, 10s, 104. Let's get to some earnings, some more earnings with Romain. Hey, Romain.
Hey, good morning, John. I do want to go back to Apple because I do think that story is emblematic of a lot that's going on in the economy. Of course, a company posting 36% revenue, 50% on the iPhone itself, and about $7 billion in services revenue. But the company making clear that that growth is not going to last, particularly for services. They're expecting a deceleration there. The company not providing guidance as well, saying that for the fiscal Q4, the current quarter that we're in, there are going to be significant supply constraints that are going to hamper sales of iPhone and the iPad. Of course, that new cycle of the iPhone and iPad expected to hit at some point late in the Q4, maybe into Q1, fiscal Q1. So it'll be interesting to see how all of that plays out. You're seeing that weigh on the shares, and that brings us to later tonight. We are going to get Ford earnings. Ford has talked a lot about the chip shortage and its inability to get supply, and the divergence right now on what analysts think sales are going to come in, it's pretty wide right now. On the low end, there's some are saying about $20 billion in sales. On the high end, as much as about 36, 37 billion. Analysts really are having trouble really pinning this down because Ford itself really hasn't been able to give clear guidance about this, saying that the supply constraints are real here, and despite the frenzy of demand for cars here, they're really not able to keep up with some of that demand here. You're also going to see later after the bell here, we're going to get PayPal earnings and Facebook as well. I want you to keep an eye on Facebook. We did Google after the bell yesterday. Of course, the advertising demand numbers were good here. Facebook in a slightly different story here. Remember, the mix of what Alphabet gets versus Facebook is very different here. Facebook's results expected to be about 50% growth here on some of that main ad numbers. Keep an eye on that. Also, though, keep an eye on what Facebook has to say here about some of his push into new businesses here. That could be a key driver here. And PayPal also coming out after the bell. We did get Visa earnings last night. Payment stocks also starting to see a little bit of deceleration, particularly, guys, with regards to some of that cross-border transactions.
Romain, thanks so much. We'll see that this afternoon after the Fed show. Romain joining us near the end of the Fed show with a look to those equity markets. Amazon on Thursday as well. This is a joy, and for all of us at Bloomberg Surveillance, he has been one of our hallmark guests through many, many years, going far back to the depths of Bloomberg on the economy. And we're thrilled to have in studio with us for the first time in this horrific natural disaster, John Riding of Brain Capital, their chief economic advisor. John, we'll get to Preston North End and Man City in a bit. I mean, you know, it was agonizing last night. How much agony does Chairman Powell have today in his press conference? Is he overwhelmed by the pandemic?
I hope not. Look, nothing really in the economic fundamentals have changed since the last meeting when they talking about tapering the bond purchases. Inflation's run hotter than the Fed has expected since then. And in fact, the 5-year average inflation and core inflation's running above the Fed's 2% target. And that was the whole flexible average inflation targeting framework. The employment numbers have continued to rise. There's now approximately one unfilled job per unemployed person. And that's something that St. Louis Fed President Jim Bullard, that's one indicator he's been championing. But you do have the rise in the Delta variant infections. But what does Federal Reserve policy do for that? What we need to do, and admirably, we've seen some governors in southern states come out and say that, is get the vaccination rates up. It's that simple. Monetary policy cannot combat the major problem to the economy.
On the planet radio, I'm putting up my hand with my lovely 5 fingers here going here. On the planet, there's fingers left over of people with legit Bank of England and Fed experience, like John Riding. Is Chairman Powell speaking globally today? And is he speaking to central banks that maybe are not on the same page as he is?
Obviously, there is a massive global element to this, and other countries, a lot of other countries haven't had access to the same vaccine supply. The U.S. has an abundance of vaccine supply relative, sadly, to the number of people who are willing to take the vaccine. And that is a major issue. But the question is, does the chairman give some signal on backpedaling on when they're going to start tapering back the purchases of bonds? And as you have pointed out, and as John across the way has pointed out,
across the way,
that the 10-year yield has dropped 25 basis points since the Fed gave a signal that it was talking about tapering and advanced its timeline for the first rate hike into 2023. So domestic considerations have to be the primary focus for the Fed. And I've thought about this. If the Fed were to signal that it's less inclined to start tapering back its bond purchases, I think that would be a disaster for risk assets. It would be like suddenly saying the problems that we have with the Delta variant, and they are significant, are forcing the Fed to rethink the very slow renormalization of policy that I think they signaled that they were moving towards announcing perhaps in September.
John, do you think we are overly preoccupied? And I say we, do you think the Federal Reserve is overly preoccupied with how the market might respond to all of this? Do you think that's the case?
We know the Fed is always preoccupied with the market, particularly when the equity market takes a big decline. But we have the equity market that's just coming slightly off of record highs. And we have a bond market that, if you're worried about a bond market response to tapering, a mini taper tantrum, the tantrum will be from a 25 basis point lower yield than you were back at the June meeting. So I think that the Fed has to show a little mettle here and say, the variant is a concern.
Yeah.
It's having an impact. But nevertheless, there is plenty of demand, and we know there's plenty of demand. Look at yesterday's consumer confidence report with an increase in the percentage of households planning to buy a car, if they can find one, if Ford can manufacture one, as you were reporting a few minutes ago. You know, our people are ready to buy major appliances. So it's a big increase there. A lot of households are flush with cash. Some still have troubles on rent, and that's a major issue that needs to be cleared. But that's a fiscal response. So what is the Fed's responsibility? And I think it's just, remember, the Fed's easing. Every month, the Fed is easing by printing a new $120 billion of effectively electronic money to buy bonds. Why are we continuing to ease? And that is a key question. Explain, why are we continuing to ease, and what benefit is that providing in an economy which is now running hot on inflation, where GDP later this week is probably going to come out at around 8.5%. The entire gap between the potential GDP growth line and actual GDP is probably pretty much closed by the middle of this year, as we'll see, I think, later in the week with the GDP report.
So, John, just real quick here, we've been talking about how Treasury yields have actually fallen since the Fed took a marginally more hawkish tone. Could we see Treasury yields at the longer end rise if the Fed does remain on hold in this meeting?
You could, but to Tom's point earlier, So we haven't talked about real yields today, and I fully congratulate Tom for always bringing us back to looking at the decomposition of bond yield moves between real and inflation break-even. The entire rally in the bond market.
Carry on, John, please.
The entire rally in the he'll pay me later. The entire rally in the bond market has been in lower real yields. It's not been in lower inflation break-evens. The job of the Fed, as it has set itself up, is to anchor inflation at around 2%. I think that's too high, but that's the job of the Fed. That's what they've set out to do. And yields haven't fallen because the Fed, has, in the markets' eyes, have seemed to be getting better at that job. So I dispute the Fed has been more hawkish. The Fed is responding slowly to an inflation story that's unfolding at a faster pace than they thought.
Okay, John, obligatory Preston North End question. Go ahead.
You want to do it now?
No, you do it, please.
I think that's rude. I think that's rude to do it at the end of the interview, Tom.
Well,
after losing to Manchester City, that might be really difficult for John to talk about.
It was a friendly.
Losing to the Premier League champions who have players on the team who are paid more than probably it cost the
true. So true. John, fantastic to catch up with you. You know I could listen to you all morning.
From across the way.
John Riding, Green Capital Chief Economic Advisor. I am across the way.
Across the way.
What John just said
It's a great song.
It could be quite interesting later, Tom. The D word. Might we finally see some dissent this year at the Federal Reserve? Go straight to the bottom of the statement. And let's see if there is some dissent
There's some research memos this morning that allude to that. To, again, get to the September meeting, you begin the conversation today. Maybe Michael McKee will be rude enough to begin that with a question.
Last time we had some dissent, I believe, was September 2020. I think it was Kashgari and Kaplan on the communication. Not in the same direction, though. They weren't on the same side.
I thought we had dissent in the last commercial break.
We often do on this program, Tom, as you know. Coming up, Joseph Stiglitz, Nobel Prize winner, economist, and Columbia University professor of economics. From New York City this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Laura Wright. A House committee investigating the attack at the Capitol could subpoena former President Trump's top allies. In the first public hearing, members of the panel made it clear that the former president's activities on January the 6th are a central focus of their probe. Yesterday, they heard dramatic testimony from 4 police officers who helped defend the Capitol. Congress is going back to the mask. The Capitol's attending physician has reimposed a mask-wearing requirement for all lawmakers and others while they're on the House floor. Violators can be fined. 2 House members and several staffers have tested positive in recent days. Second quarter sales beat estimates at McDonald's. U.S. customers proved willing to pay higher prices at the fast food chain, and there were fewer pandemic-related closures in international markets. Comparable store sales rose almost 41% globally from a year earlier. Spotify added fewer users in the 3 months through June than investors expected. The streaming giant blamed the pandemic for its second straight quarter of sluggish growth. Spotify added 9 million monthly active users, bringing the total to 365 million. That fell short of the company's own forecast as well as Wall Street's. Bloomberg's learned that Credit Suisse gets ripped in an internal investigation into the Archegos Capital scandal. The probe said that the Swiss bank failed to properly monitor tens of billions of dollars of exposure that piled up while handling trades for Archegos that generated little revenue. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
If inflation did seem to be persistent, the Fed wouldn't hesitate to act, and that you have the tools to deal with inflation. What do you say to critics on Wall Street who say, yes, you have the tool to deal with inflation, you raise interest rates, and then historically plunge the economy into recession?
Yeah, that's exactly the kind of logic, I think, that you want to avoid, that you get too far out of alignment with what's actually happening in the economy, and then you really have to react more strongly than you'd like, and possibly causing disruption in the economy. So you don't want to be in that situation. I think the risk management here is that if inflation does come back down in 2022, we're in great position for that. We're exactly positioned for that. But if it doesn't, we're not in such great position. So I think for that reason, we want to have some flexibility on this taper.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I would say with respect to inflation and those cost headwinds, we're not in a dramatically different situation than many of the companies that you talk to. We see price pressure, we see shortages, semiconductors, resins, and the like. So we're battling that every day.
Larry Culp of General Electric, the chairman and CEO from New York City this morning. Good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Here's the price action on this Fed decision day. Equity futures up 2 points. Thank you, Tom. Up by 0.05% on the S&P 500. Yields, Tom, up 2 basis points. You playing this game or not? 126.27 on 10s. Boeing stock, Tom? Thank you. Up by 3.62%. Good news from Boeing for the business, for the stock, and for the people who work there as well. Revenue coming in. Upside surprise, $17 billion. The estimate $16.54 billion. The stock up by 3.5% in pre-market trading. And this line, Tom, citing an encouraging recovery to keep the workforce plans unchanged. They were cutting the workforce to about 130,000. That was the plan. And now we're going to keep it unchanged, roughly consistent at 140,000. Good news for the people who work at that company, and good news for this economy too.
They're afraid of losing them over the long term. Dollar up as well. David Wilson with us, always with an up chart in the heat of his earnings season. David, quickly, what do you have?
What I'm talking about, Tom, is companies that do the most business in China. You know, you'd figure that with the Chinese government cracking down on U.S. listed shares, that, you know, you'd see declines in the U.S. companies that are dependent on the Chinese market. But it's just not happening. It's something that Liz Ann Saunders over at Charles Schwab pointed out in a Twitter post yesterday. And if you look at a Goldman Sachs index of companies in the Russell 1000 index with the most percentage of sales in China. You find out it's up 49% in the last 12 months. The Russell's also higher, but only 37%. And you haven't seen the China sales exposure index, as it's called, really kind of come back to the pack, even with everything going on lately involving China.
Too short a visit. Do it longer tomorrow with Amazon. David Wilson, thank you so much. As he mentions Lizanne Saunders will, of course, mention the late Martin Zweig. It was Mr. Zweig who said, don't fight the Fed. Always fighting for the most important question that stops a press conference. Our Michael McKee joins us, our economics and policy correspondent. Is the market fighting the Fed here? Is the market, are participants fighting Chairman Powell?
No, the market's going along with Chairman Powell right now. They're buying the argument that inflation is transitory. The question today is, do the Fed have any scope to try to change policy, or at least change the way they talk about it? And there are questions about rising risks to the economy. I brought along a chart here for those of you who are visual learners. It's pretty simple. COVID cases are going up and inflation is going up. So are there downside risks to growth, and are there upside risks to inflation? Goldman Sachs thinks so. They cut their forecast last week. Slower hiring. The Fed's focused on jobs. So where does that go? Well, where does that leave them?
Do we get dot plots today? Do we get lots of statistics that help you ask a better question?
Nope, we don't get any additional forecasts or dot plots. We basically are going to be parsing the statement, and the question in the statement is, what do they say about COVID? How far do they go on that? And then what do they say about inflation? With inflation rising, in the last two statements, all they said was inflation has risen, largely reflecting transitory factors. But at his congressional testimony a week ago, Jay Powell said inflation has increased notably and will likely remain elevated in coming months before moderating. If they put that in the statement, one question is, does the market see that as a more hawkish signal?
We got a hint of that, Mike, also in the news conference last time around. What you just mentioned was in the statement. It was in the opening statement in the news conference. Then as far as I don't remember hearing the word transitory in that news conference at all. Are you expecting a little bit of a communication shift again here? Because the Federal Reserve Chair, for many people, including myself, watching that news conference, believed that what we saw was a Federal Reserve Chair shift away from using the T word and talk more about the balance of risk around the outlook. Is that what you're looking for?
I think that's what we'll probably get today, at least from Jay Powell. I'm not sure how they changed the statement, although they should acknowledge inflation is running faster. But the big question has been, how long does transitory last? What does that mean? And so the question for Jay Powell today is, what are you talking about in terms of transitory, which is why he probably will try to stay away from that. And you saw that new formulation when he spoke with Congress last week.
Michael, one more area we've gotten serious inflation has been asset prices. And there was a story on the Bloomberg highlighting UBS research showing that the wealth inequality gap has widened to unprecedented levels. They pinpoint the Fed's actions as a big driver of this based on how much asset prices have inflated. Does this matter to the Fed, the deleterious effects of some of their policies?
It matters, but it's a question of weighing what matters more. The Fed argues, and we saw a vociferous argument in favor of this from the San Francisco Fed Bank president recently, saying, we are focused on getting minority unemployment down, and because we're doing that, it helps some people get richer, and we can't really do anything about that. So we have to let that happen in order to reach our wider goals for more people. And that's kind of where they're at right now, is they're willing to take that chance.
It's Greek to me. Let's do the Latin. Ex ante, Mike McKee, is get out front. Ex post is wait till after the fact. Is this the most ex post FOMC ever?
I won't say ever, but you go back to some of those raising rates a quarter point at a time. Everybody knew what was going to happen. It's going to be more about the taper debate and how much Jay Powell says about how much they discussed it.
So this has got to be the day where you drop a bombshell.
Well, I don't think they want to drop a bombshell in the middle of July at the end of the month when volumes are down and you could get a lot of volatility.
John, I think this is really important. Everybody's half asleep.
I'm always open to anything. I think,
and
Tom,
the answer is, boom, let's do it now.
If they go in your direction, if they start talking about this in a more significant way, they start to evolve the language a little bit more, they've got to aggressively de-link that conversation from any conversation about interest rates. That's probably the ultimate challenge right now, because you know how market participants work. They're focused not on the first move, they're focused on the sequencing and what's next. It's always the what's next. What's next, what's afterwards.
Okay. You know, I'm just trying to set up Mike for an exciting question today. John, what's our betting that McKee gets the last question again?
Oh,
what
you
is
know,
that about?
I'm pretty sure that Mike goes at the end, Tom, and then gets ignored. Do you remember the time they played
Yes, I
elevator
do.
music? They played the elevator music over.
That's good.
Over Michael
We can
McKee
look for that.
at the end. I'll look for that a little bit later. Michael McKee.
will.
Looking forward to that coverage later. We will be covering that Federal Reserve decision for
And
you.
Mike's question.
I'll just briefly drop in by, Tom, alongside you and Lisa, working
You'll
through
be across the way. It's
working
good.
through what could be a boring news conference. Let's hope it's not. A difficult time for the Federal Reserve. And Tom, look, everything Mike's just said, there are a whole list of excuses to take a punt this week and not do much at all.
I think seriously, I think it's a changed conference. John, has changed from 2 or 3 weeks ago.
Would you agree, Lisa?
Yes, although I do wonder if they do remain on hold, whether yields actually rise, because the markets look ahead of the Fed at potential inflation that would be allowed to pick up. The market response I find interesting.
Yeah, that's the difficulty I've had. You can call the Fed, you can call the data. Can you call the market in response to the Fed and to the data? Yields this morning, 126, 10's up by 2 basis points. From New York City this morning, equity futures down, Tom, down about a point, negative 0.02%. Tom, if you want one, Boeing stock, what is it?
Up.
No, up.
Dollar.
Up 3.8%.
Dollar up.
Real value add this morning, Tom.
Oil up.
On TV, on radio. Crude's positive, Tom. You got that one right. 72.
Nailed it. Thank you.
E3 is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
Billionaires in space?
What defines going to space?
There is a level where you
It's
get
the common line?
It's a common scientific theory, 53 miles, 62 miles.
I think that it's just being able to float around, and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing
This
that I
is a
mentioned and you
big
carried on talking
physics
and
thing.
ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
This kind of economic strength, while it bodes very, very well, doesn't necessarily mean that corrections don't happen.
Each central bank is trapped, and they're not going to be able to exit this unconventional monetary policy.
They're all using models that are traditional models, but this has been a very non-traditional recession.
We're already in that decelerating upward revision pace, and about half the sectors are contributing to that right now.
The era of 0 to 2% inflation is over. And as a result, we're going to have to get used to a little inflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Fed Day with our coverage this afternoon. But before that, the reporting of profit and increased revenues, a resilient corporate America. John, Norfolk Southern, just out moments ago. They look good. So does everyone else.
Things are okay. That's the headline, isn't it, Tom? It's hardly clickbait. Things are okay. Apple just delivered record revenue in every single geographic segment. They just delivered double-digit growth in every single product category. And Boeing out with some good news this morning. That stock up by almost 4 percentage points. And some good news for the staff at Boeing as well. They were looking to trim the workforce from 140 down to 130,000. Things are progressing in a way that means they can maintain things at 140,000. Things are okay looking at these numbers, Tom.
John Farrow, Victory Lap, I think you and I have been way out front on the idea that corporations will adapt and adjust. John Farrow, how does Chairman Powell adapt and adjust today?
So what we're talking about, Tom, right now is an observation about where we are. That's not a judgment about the future. There's a lot still to play for here. How the supply side of this economy responds is going to be really interesting. And Nouriel Roubini made the argument just a couple of hours ago, Tom, that maybe it won't respond in the way people anticipate. And to find out, guess what? You've got to wait. Patience. And we have a patient Fed chair.
Lisa, we have a patient Fed chair, but he is a society Fed chair as well. We've never had a chairman so focused on the inequalities of the nation. Will you listen for that today in our coverage? I mean, how does he play that?
Yeah, because frankly, that will give a guidance as to what the metrics are they're looking for before they start tapering, what full employment actually means at a time when he's looking at who is getting employed. I will just say the fact that the Fed chair is willing to remain patient, that's the expectation today, really flies in the face of those earnings to tie this all together. Again, 87% of S&P 500 companies reporting in July have talked about inflation, how that's affected their bottom line. Consumers aware of inflation. How does the Fed chair continue to justify the transitory kind of theme as he moves away from that word in a world that's accepting a very different reality?
Yeah, and Lisa, you a day or two ago, I can't remember, across the way, you were the one who said labor participation matters. I don't know if he's going to bring it up directly, but this is a chairman who has to wait for an American labor recovery.
Yeah, but what is their policy doing to actually help the labor market? And this, to me, is very unclear. We don't understand the full frictions in bringing people back online, John.
The other observation, really important on radio and television, we don't need a chart. John Farrow nails it with a yield pre-Fed, last Fed meeting, I should say. What, John, 150 down to 125?
Just south of that. Closed that day at 157, Tom. Closed that day with yields higher at 157. And right now, where are we, Tom? 126.10. on 10-year yields.
Yeah, 126.10 and the 30-year under 2% as well. John, red and green on the screen. I'm going to go with that. Tell us what else you see.
Positive 2 points on the S&P, Tom, up by 0.05% into the bond market. I mentioned that briefly. Yields higher by a couple of basis points to 126.10. In the FX market, euro slightly negative, 118.08. It's one of those snoozy mornings, Tom, ahead of a Fed decision and news conference a little bit later.
Well, not snoozy with Beata Kerr, Bernstein, Private Wealth Management. Of course, what to do with the money is all. Beata, let me start with the bond market. How can I own bonds with yields this low?
Well, that's the question many investors have been asking, and we've been working with our clients at Bernstein to ensure that the old 60-40 is not the new 60-40.
What's the new 60-40?
Well, look, I think you have to include some alternatives if you're a qualified purchaser or accredited investor on the yield options that are available in some of the illiquid markets. You're going to have more opportunity than what you have in the traditional markets. But that doesn't mean bonds as part of an asset allocation are going away. High quality, intermediate duration municipals are still positive this year.
Right.
The default rates in that asset class remain very low. Balance sheets and rainy day funds have held up. So we would say bonds still play a role in being a defensive asset class for investors.
Beata, I'm looking at the Dow, 12 months trailing, up 33%. Standard & Poor's does better, up 37% as well. What do our listeners and viewers do who have been left behind, like people in the triple leveraged all cash fund? How do you enter the equity market if you're not on board right now?
Well, look, we work with our investors to understand their individual risk tolerance. There's not one answer for everybody, but we would say averaging into the market is the right thing to do over a period of time. When we look at valuations today, while they are high on absolute levels, you were just talking about it earlier, corporate profits have been incredibly strong, one of the strongest quarters on record. And look, we're watching the Fed just like you're watching the Fed. What's going to happen on rates is going to determine those multiples on the market. And today, with rates as low as they are, the multiple is not high on the equity market. And it comes back to what is your best alternative to equities? So we remain overweight equities tactically today for our investors.
Well, let's talk about the regional breakdown of that overweight, Beata. How are you leaning towards international at the moment with all the headwinds starting to build in places like China and elsewhere?
Right. Well, international is not one monolith either. You've got to really split up what's happening in the developed international markets from the emerging markets. And as you know, China is about 1/3 of the emerging markets benchmark. So let me go back to the other side of the world in Europe. In Europe, they have been lagging from a vaccination perspective. And if you look at the U.S. market relative to our vaccination rate, as vaccination rates went up, the market rallied. We think Europe is actually primed to be in the same place and follow suit. Also, the European market is exposed to more cyclical companies, so leaning into financials, industrials, some more consumer discretionary names, as we see more opportunity from that perspective as well as valuation in the developed international space.
So I'm going to steal a question from Jonathan Farrow, who's been on this issue for a long time, which is why not just own the index? And there is a question of the role of active management at a time of such strong growth and the idea that, yes, you know, sure, there is diversification under the index headline level, and yet if you've owned the index, you've outperformed. Why is that not going to work going forward?
We think we're in a prime time today for active management. And if you look at the style shifts that have occurred, especially on the S&P 500 year to date, you started the year where it appeared that owning cyclicals and values was the thing to do. A quarter later, as there were more concerns about inflation and its transitory nature, and as the Delta variant has popped up, the growth stocks came back into focus. So really solid stock picking by active managers has therefore outperformed that passive index. And this is a year where we think you really have to be nimble. You don't want to own one or the other. We're not making a call that says the time is now for value or growth. We're making a call that idiosyncratic stock selection is the way to go. And we're seeing that actually play out quite nicely this year.
How do you remain nimble? Is it cash?
Well, look, I think our portfolio managers remain nimble in response to company earnings and valuations and are making changes on a daily basis. For an individual investor, we do work with our clients to start out with that cash pool and get invested at a time that makes sense for them. So I do think it's a time where having some cash to deploy and look opportunistically for sell-offs is a good idea.
Good to catch up, Beata, to get your thoughts on this market. Beata Kerr there, Bernstein Private Wealth Management, co-head of investment strategies. For those of you that follow the Dow, Tom, you might be interested in Boeing. It makes up about 4% of that particular index, so I'll bring you the numbers. Do you like that? That was just for you. I'm feeling kind today. Boeing coming out with numbers. Revenue $17 billion, the estimate 16.54, so that's an upside surprise. Good news for the workforce. Boeing citing encouraging trends that's allowed them to keep the workforce unchanged, Tom, roughly consistent at 140,000. They'd plan to cut the workforce to about 130,000. So there's a good read there for the business, for the stock. but also for the economy as well, for the workforce.
John, there's a really important observation, and what is so important about it is the why. Why are they doing this? Because they're afraid if they lose them, they can't get them back.
That's a really interesting point, Tom.
Yeah.
So you're thinking about planning not just for this year, for next year, the year after that, the year after that.
And this goes to the technology earnings and this whole thing we're doing, this dance on extrapolation. Everybody, and particularly in business media, John, we're all focused on what are we doing at 9 a.m. on the open. I mean, that's all we're focused on is John Farrow's show at 9 a.m.
Thanks, Tom.
The rest of the world's looking out 2 years, 3 years, 5 years.
I think the rest of the world's also focused on the open, isn't it, Tom?
Excuse me.
Surely. I'm with you, though, Tom.
Correction.
Those long-term decisions matter. And in an economy where it's really, really difficult, Lisa, to attract staff, let's be clear about that. This is an economy at the moment that is very, very difficult to ramp up production because you can't get the staff. Cutting the staff is a huge decision, an even bigger one.
I think it's the right point to point out, Tom. Well done. And John, you were talking earlier, are we seeing a shift of away from the employers to the employees? And is this just another sign that perhaps people are being valued in a different way than they were a year ago when they were being cut? And I'm wondering how much the experience of Delta and of American Airlines and United struggling with the fact they couldn't bring pilots online quickly enough to meet demand, how much that is really driving some of these staffing decisions.
I saw that Delta had apologized for some of their customer service issues. Did you see that? After Michael McKee perhaps alluded to that yesterday when he was talking about some difficulties he might have had with an airline. I'm not confirming that it was with that airline, Lisa, just suggesting that Michael McKee had a difficulty with an airline, and one particular airline, Delta, Tom, did apologize.
It's a broken model, period. It doesn't
For that
work.
specific company, Tom,
No,
or just the industry?
Across the industry.
Across the industry.
It's a broken model across the industry.
Equity futures up 1 point on the S&P, advancing 0.02%. Yields are higher by a couple of basis points to 125.93. It is Fed Decision Day on radio, on TV. This is Bloomberg Surveillance.
With the First Word News, I'm Laura Wright. Next month, Pfizer plans to launch a study of a vaccine that targets the coronavirus's Delta variant. Delta is blamed for the surge of COVID cases in the US and elsewhere. Pfizer says the first batch of Delta-focused vaccine shots has been made. Federal Reserve Chair Jerome Powell and his colleagues are likely to emphasize patience today on scaling back the central bank's massive policy support. Policymakers are almost certain to hold interest rates near zero at the end of a two-day policy meeting. The Delta variant is seen as giving Powell another reason to stay cautious. Stocks in China and Hong Kong halted a three-day sell-off. State-run media tried to reassure investors, shaken by the government's regulatory crackdown. Traders fear the latest moves against education, tech, and the property sectors could expand to other industries. At the Summer Olympics, US gymnast Simone Biles has put the spotlight on her mental health as well as for other athletes. Biles has withdrawn from the individual all-around final at the Tokyo Olympic Games, a day after she withdrew from the team final. According to USA Gymnastics, Biles will focus instead on her mental health. The organization says she'll be evaluated daily to see if she will take part in next week's individual event finals. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
went up to Maine and had a lobster. And it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio. Again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here. Have you
Commodities are up.
Keep going.
To the moon.
No. Beautiful.
Bloomberg Surveillance. Weekday mornings on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
We set a new June quarter revenue record of $81.4 billion, up 36% from last year, and the vast majority of markets we track grew double digits, with especially strong growth in emerging markets, including India, Latin America, and Vietnam.
Almost called him Tim Apple. That's a throwback, isn't it? Tim Cook, the Apple CEO.
I like that. Sounds like something I do.
Something someone did a number of years ago, Tom, from New York City this morning. Good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Wednesday morning, here's the price action on the equity market on the S&P. We advanced a little bit, a single point, up by 0.03%. A lift on the NASDAQ 100, up 49, advancing there a third of 1%. Yields are higher by a couple of basis points on 10s going into that Fed decision and news conference with Chair Powell, 126.27 on 10s. If you get to the story for Apple and for the other big tech players, Apple in the pre-market was just a little bit softer. It's down 0.9%. Beats across the board here. But Apple with a bit of a forward look, just a sneak peek, Tom, talking about slowing growth and supply chain disruptions persisting. That's just weighing on the stock a little bit. But I put the emphasis on a little bit. We're down 0.9% to 145.48.
The angst is overwhelming. Tom Forte is with D.A. Davidson, and he is known for immense concision in his reports. Others may write 5, 6, 8, 12 pages. He'll give you 2 pages and critically Excel spreadsheets that say, shut up and buy it. Tom Forte goes to $175 today on Apple Computer. Tom, buried in your voluminous research note is a revenue build of 10%. Can you extrapolate out a 10% revenue build for Apple Computer out 2 years, 5 years, 10 years?
Yes, I can. So if you look at China as a precursor for what sustained 5G sales could look like for Apple, they had north of 50% revenue growth in the June quarter in China, where the build out for the 5G network is far ahead of the US, far ahead of the rest of the world. So if you think of starting with China and 5G, US following, rest of the world after that, I think you can have a sustained double-digit top-line growth for Apple for years to come.
They are buying back shares with ample cash flow. If you get a Forte revenue growth, do you assume the privatization of Apple with that massive share buyback?
I think you can assume that they will continue to use a large portion of their free cash flow to buy back the stock. And I think that the big, benefit Apple got when they lowered the corporate tax rate is it freed up even more cash flow to buy back shares. So yes, they're generating, by Apple standards, very robust top-line growth. And when you think of their high margins, lots of free cash flow, lots of opportunity to buy back their stock and retire the shares, as you pointed out, Tom.
Tom, the company has pointed out that supply chain constraints might persist, that growth might slow. I think for anyone taking a longer look, the question is always, every single quarter, looking ahead 1 year, 2 year, 3 year, 5, is how to value this company, on what multiple. If we continue to see this shift towards services, even hardware as a service, and we get that recurring revenue boost that we have seen over the last several years, what is the appropriate multiple for a company like this one and the company it's developing into?
So excellent question. For most of my companies, I'm valuing on a discounted cash flow basis, as is the case with Apple for our 175 a share price target. But from a multiple standpoint, to the extent that Apple has a larger percentage of recurring revenue, which has been one of the keys also on the higher margin revenue for their services effort versus even their high margin hardware, we've seen an increase in the PE that investors are willing to pay for the stock. And yes, it could go even higher if they have a larger portion of sales that are recurring.
In the meantime, Tom, how much are you looking at the iPhone cycle and the fact that people are looking to some new models that perhaps aren't as exciting as some of the more recent advances? The idea that we may have to wait a while before the 5G cycle really gets some steam.
Great question, Lisa. The way that I think about it is, at least in the early stages of their 5G devices, when you think about the pandemic, most consumers were using them at home, and having a new iPhone with a faster processor on your home Wi-Fi was a great experience. So to the extent that this is essentially given Apple air cover as the networks in the US and across the globe are built out more for 5G, we think that this plays out well for Apple.
In the meantime, as we move to services, and we did see the services revenue come in much better than expected, there's a concern about what they have to do, how much they have to fortify what they provide in order to get the revenues that they would like to see going forward to justify some of these multiples. What do you foresee in terms of media, either acquisitions or development, to really justify the move to a service-based company?
So the way that I think about it is Apple and Amazon, for the most part, are builders and not buyers. Yes, there's been a couple exceptions for Amazon. MGM at 8.45 is a buy, not a build. But for Apple, you think of the very early days of Apple TV Plus. Ted Lasso had something like 20 Emmy nominations. So to the extent that some of these early stage efforts, like over-the-top subscription video on demand, Apple TV Plus, start to improve over time, and to the extent that consumers with their large install base engage in more digital media, I think that could help Apple with their services revenue, and then also on the multiple front.
Tom, you've teed up the Ted Lasso talk. Before things get less serious, let's just keep them serious just briefly. 175 is your price target now. You nudged it up a little bit despite those supply chain constraints that Apple is speaking about, despite the fact they think growth will slow. Is there anything to be concerned about after that call yesterday?
The concern on the call for me remains government interference, especially when you look at what's going on with China. So 30% is their take rate for many of the apps in the App Store. To the extent that regulation, executive action, things of that nature could lower that figure materially, perhaps to 10% over time, that still has me up at night on the stock. Supply chain concerns on iPhones would be second.
Interesting. Tom, good to catch up. Let's get your view. Thank you, sir. Busy one for you, I know. Tom Forday there. D.A. Davidson, Senior Research Analyst. Tom, looking for 175 on Apple. Right now, before today, 146.77 at the close. Right now, where are we? 145.81 in the pre-market.
There's a modest gloom crew, John, on Apple. I wonder how they adapt off of these earnings, and do they throw in the towel? Do they go to hold? I mean, I just don't know, what they do. Again, I would go back to margin persistency. No one expected that.
The analyst community right now, Lisa, 35 buys, 8 holds, 3 sells.
Yeah, mostly very impressed by the earnings, saying they have beaten, even though they're not providing forward forecasts. This is par for the course post-pandemic. I think that what Tom Forte was saying about some sort of regulatory action is important, especially in light of the dominance that these companies have. And I know that Joe Stiglitz of Columbia will talk about this, but the idea here of whether the Biden administration will take action, whether the Chinese moves recently against tech could have any galvanizing effect, it is a real still question out there, John.
We'll try and have that conversation next. We'll be catching up with the man himself, Joseph Stiglitz, the Nobel Prize-winning economist and Columbia University professor of economics. Your market up 3 on the S&P. We advanced by 0.08%, call it 0.09, following some big numbers from big tech. Just beats across the board. Outside of that, yields are higher by 2 or 3 basis points to 126.94, going into a Fed decision and Chairman Powell news conference. Full coverage on Bloomberg TV, on Bloomberg Radio, a little bit later this afternoon. I understand 1:30 Eastern. That's the time we're requested to be back at our tables with Tom Keene, Lisa Bravitz. I'm Jonathan Ferro. Heard on radio, seen on TV. This is Bloomberg Surveillance.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Live from New York City for our audience worldwide on TV and radio, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro, getting you set up for the day ahead. Federal Reserve Chair Jay Powell taking center stage at about 2:30 Eastern. 2 Eastern is when we get that decision from the Federal Reserve. Our coverage will begin at 1:30 Eastern time. Alongside Tom and Lisa, I'll be joining them. Your equity market up 5 on the S&P, advancing a little more than 1/10% after a close yesterday. Just north of 4,400, a softer close yesterday, still in at around all-time highs. Into the bond market, yields higher by 2 or 3 basis points. Tom, your yield going into that Fed call, 126.60 on 10s.
And John, I'll editorialize and say we have the best, smartest list of guests ever. We always have wonderful guests, but we've got a terrific lineup today. Scott Minerd will be along with Bitcoin at 40,000 to tell us it's going to 400,000. Right now, this is a real highlight for me. Joseph Stiglitz of Columbia University, the laureate, has many different parts of the economics that he studies. I think of him like I think of the late Kenneth Arrow. Right now, Joe Stiglitz on our fixation on secular stagnation. Professor Stiglitz, this goes back to Alvin Hansen and on to Lawrence Summers, and you say, no, 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 it's not secular stagnation. It's a complete focus, a fetishism on growth. Explain to us why secular stagnation is off the mark.
Well, the idea of secular stagnation was that there was something wrong with the economy such that even at zero interest rates, you could not maintain full employment. And that led to the idea that the zero lower bound, it was the inability to get interest rates negative that prevented an economic recovery. My view has always been that the reason the economy was weak in, say, the period after the Great Recession was that we did not have enough fiscal support. It wasn't anything about secular stagnation. It was about a policy failure. In that particular case, President Obama could not get the support from the Republicans of a sufficient fiscal stimulus to get the economy back into a robust recovery. And so today with President Biden, we've shown that if you give enough fiscal stimulus, you can get a strong economy. The real question facing us today is whether we will be able to get, you might call it the second dose, the broader packages on infrastructure, family care, and so forth,
right,
that will both be a demand support and a supply support.
Well, Joe, that's a political debate that we'll have for another time. You own the little g in economics, a complete focus on the growth rate. With the new debt and deficit buildup that we have and Lawrence Summers' legitimate concerns over secular stagnation, do we risk too low of a growth rate which destabilizes our belief in paying off debt and reducing the deficit?
Well, the IMF in its World Economic Outlook, WEO, which just came out, actually said that if the Biden plan is adopted, they went ahead and made projections assuming that it would be our growth would be 7% this year and over 4% next year. So they, like me, are confident that if we give the right support to the economy, we will have growth, and that growth will enable us to be in a good position to repay the debt and will sustain, these investments will provide the basis of growth over the longer time.
Professor Stiglitz, we've been in a perpetual low inflation environment. You were talking about that as the new normal, and basically you're blaming a policy failure on the fiscal front as the reason why. Going forward, though, to shape our inflation debate, how much do we have to look at the supply chain disruptions that we're hearing from almost every company that reports earnings this season?
The market is quite good in steering the economy when there's a small adjustment. We want a little bit more cars. We want bigger cars, smaller cars. We're always going through these kinds of adjustments. But we've been through an experience that, other than times of war, we've never been through, where you transform, shut down large parts of the economy. And the market doesn't do a very good job in these very sudden transitions. So, yes, I am not surprised that we are seeing lots of bottlenecks. I actually have enough confidence in the market that most of these bottlenecks will be overcome. You saw that in the case of timber prices. It went way up and then came way down. Is there any fundamental reason why the market economy can't produce as many cars as Americans want to buy? Absolutely not. We were complaining before about lack of demand for our cars. So, of course, there's going to be some hiccups as we restart the economy. But the question is there any fundamental reason that we should expect this to be other than transitory? And I think the answer is no. And I think that's where the IMF is. That's where the Fed is. I think that's where all those who are not, again, other than those who are trying to oppose the kinds of measures that are being proposed to get the economy back on its road.
Yeah, but there are some things that have changed. There's a reduction in the emphasis on globalization. There's been a deglobalization that some people have pointed to. There's also on the margins been a bit of a shift toward labor away from employers. We saw, for example, Boeing restraining itself from firing certain employees because they didn't want to worry about rehiring them when they needed them. Earlier this morning, that announcement came out. I mean, what do you say to all of these shifts, that they're not necessarily fundamentally changing the character in a way that could alter the path of inflation to a higher tilt?
There will be some increases in prices in the process of that kind of adjustment. But let me say on the second point you made, for instance, that the profit margins have been so high that they can easily be absorbed without increasing prices. It's one of the disconcerting things that happened in the United States over the last 15, 20 years has been the decrease in the share of labor, and a correction to increase the share of labor would actually be welcome and can be absorbed without any significant in prices. Right. Side of globalization, there's going to be some adjustments, particularly in our trade relations with China. But remember, there are many other emerging markets out there, many developing countries. Right. And if we import a little bit less from China, a little bit more from Vietnam, do we really think that that's going to have a big impact on the course of inflation over a significant period of time? I don't think so.
Joe Stiglitz, I hate to tell you, but it's been 13 years since you and I talked about your courage to write a book with Linda Bilmes on Iraq and tangentially on Afghanistan. Folks, the $3 trillion war was hugely controversial, except everybody had to shut up and read it. That's what you did with Stiglitz and Bilmes. Joe Stiglitz, could you please comment after this incredibly important book about our leaving Afghanistan and the reports that we may leave Iraq?
Well, you know, when we wrote the book, the $3 trillion war highlighted the economic cost of that war. Our own estimates were that the number was greater than $3 trillion, but we wanted to be on the very conservative side. We now have the evidence. The cost just for healthcare and for pay for our veterans who are coming back itself is in the order of magnitude in excess of a couple $1 trillion. So in fact, it has turned out that our estimates were, as we intended them to be, vastly conservative. So that we focused on the cost of the war. I think the other side of it, of course, is the benefit of the war. And I'm afraid that was negative. So that, in fact, if we look at that whole episode, we destabilized the Middle East. We didn't do what we did, what President Bush claimed we were going to do, which was advance democracy in the Middle East.
Professor, always appreciate your time, sir. Good to catch up. Don't be a stranger. Let's talk soon. Joseph Stiglitz there, Columbia University professor of economics and, of course, Nobel Prize winning economist. Your equity market up 5 on the S&P, advancing about 1/10%. Up. Yields, Tom? Up by 2 or 3 basis points, 126.60. Is this our new game?
Yeah.
Apple, up or down?
No, but I mean, you
Apple's
know,
down,
the price targets are up. The price targets are up. I think it's down.
The earnings?
Yeah, everybody's like, you know,
Yes,
40
okay.
and the rest, they're all living. What's Ives doing? Is Ives out over $200 a share?
He's not yet, Tom. I think he's at 185.
Okay.
He called it a drop the mic quarter. That's
It's
what
like,
Dan
it's like, Jen, when are we going to see Standard & Poor's 5,000?
145.96.
Who's going to be first to 5,000?
Got no idea. Where are we now at Tallbacken? 4,800. Michael Purse is 4,800.
You know,
Credit Suisse at 46.
I'm just trying to create, you know, this afternoon.
You want a bit of drama, don't you?
Yeah, I want some drama. This afternoon's going to be a snooze fest.
I can't wait.
Until McKee asks his question.
Are we doing breakfast at 10 o'clock?
We're doing breakfast.
All I
Okay.
could tell
Is Lisa
is
coming to
that-
breakfast or taking a break?
Sure, I'll come to breakfast. Honestly, though,
You
the
want to be
idea
a part
that
of this
Tom...
for an extra hour?
Maybe I'll go take a nap.
Lisa, Tom Keene, Jonathan Ferro. Coming up on the Open, Bob Michael at JP Morgan
That's what we
Investment
do at
Management,
breakfast.
the CIO.
And even
of
better,
Global
Lisa, we have Tang at
Fixed
breakfast.
Income. I'm not going back to that place, Tom, unless they've got Bloomberg
They
on
got
the
to
TV.
have Tang.
Last time I was in there, I wasn't impressed with that. We walk in, if it's not on the TV, we walk back out. They're the rules, all right? And if they're watching now, good. Futures up 4, up 1/10%. From New York, this is Bloomberg.
With the First Word News, I'm Laura Wright. A House committee investigating the attack at the Capitol could subpoena former President Trump's top allies. In the first public hearing, members of the panel made it clear that the former president's activities on January the 6th are a central focus of their helped defend the Capitol. Congress is going to back the mask. The Capitol's attending physician has reimposed a mask-wearing requirement for all lawmakers and others while they are on the House floor. Violators can be fined. 2 House members and several staffers have tested positive in recent days. Second quarter sales beat estimates at McDonald's. U.S. customers proved willing to pay higher prices at the fast food chain, and there were fewer pandemic-related closures in international markets. Comparable store sales rose almost 41% globally from a year earlier. Shopify's second quarter profit was more than double what analysts had estimated. The Canadian e-commerce company gave the credit to the Biden administration's stimulus package and what it calls sustained momentum of digital commerce trends. Apple is warning that sales growth may be slowing and supplies are getting tight. That put a dampener on investor excitement after a record-setting third quarter. Apple says that supply constraints will affect the iPhone and iPad in the current quarter. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we're trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Wednesday, the Fed decides. How worried are they about inflation? What will they signal about tapering? Coverage begins at 1:30 p.m. Eastern on Bloomberg Television and Radio.
I'm really enjoying my life at Netflix right now. I think we've just gotten started there. And, I can't wait to keep building on that and enjoy that, making new shows there, working, building on our podcast world. Enjoying those worlds is exciting to me.
This is the example of what you do when you go to a good school and you take one of those wacky majors like film studies and it works out. Her name is Shonda Rhimes, and she is definitive in the storytelling of a modern age. There's no other way to put it. There are some on our team that still have not gotten over the death of Lexi and Mark in Grey's Anatomy. I hope I'm not giving it away for anyone like Abramowitz. But right now, our expert on storytelling, David Rubenstein, joins us, of course, peer-to-peer tonight, 9 p.m. In New York. And David, this is just I love that you did this. A conversation with someone creating each and every day. What did you learn from Miss Rhimes?
Well, she's an incredible talent. She grew up in Chicago, the youngest of 6 children, went to Dartmouth, and decided to get into writing after she tried her hand at advertising. And turned out she's the greatest writer and producer in recent Hollywood history. And she's the most powerful force now in Netflix, because the show she just produced and wrote, Bridgerton, is just broken all the records for Netflix. So an incredible talent, very nice person. I've gotten to know her over the years because she was on the Kennedy Center board for 6 years, and she still helps serve on the Kennedy Center Honor Selection Committee. So she's an incredibly smart, good writer, very creative, and a very likable person.
Is she her business person, or does she have people around her that help her?
She's not that focused on money so much as creativity. She does have people, I guess, manage her money and so forth, but she doesn't measure her self-worth by her net worth. She's not trying to be the richest person in Hollywood or something. She's trying to create really good shows, and now she's adopted 3 young girls. They're now a little bit older than young, and she's raising them as well as doing all the other things, and she's creating a lot of shows that are just hits. She doesn't seem to have any failures, so she's an incredible person, and she's very young. She's under the age of 50.
And I must have a confession publicly, clearly. Bridgerton is also fabulous, and they are all incredibly addictive shows. She is coming and rising at a time of incredible power of content, where content is king, and there have been bidding wars. What does she say in the longevity of this trend that we have seen as the streaming wars heat up?
Well, remember, Grey's Anatomy's been on now for 18 years. It's still on ABC, even though she's not directly involved so much now. She has long-standing ability to kind of write things that will stay the test of time. So she's not a one-shot or one-trick pony, as they would say. She's produced a number of shows that have done quite well. She just has the ability to not only produce but write. And writing is very hard. It's a solitary business. She likes to be alone. And during COVID, she could write even more because she was at home, working at home. And she now finds that probably she'll work at home more because it enables her to write more. Sometimes writers get out of being writers. They want to be producers. They want to be moguls. She likes writing more than anything else.
I look, David, at all of this, and it comes back to your interpretation of the streaming success, whether it's what Ms. Rhimes is doing or Ted Lasso or the rest of it. Our interviews, David Rubenstein, is profit is not out there. How do you expand a creative business if nobody really understands where the profit is? Will there be profit?
Well, there is a lot of profit in streaming for sure. Of course, Netflix is a very profitable company and has an incredible number of subscribers. It's not clear exactly where it's going to go, but I think that the streaming is the future, and that's one of the reasons she left ABC. She was on Thursday night, the entire Thursday night evening programming for ABC for many, many years, and she just left abruptly with some notice, of course, and then she went to Netflix because she saw that as the future, and probably streaming is the future of this kind of creative work.
Do you see it as a future without an identifiable profit? The Roberts family made that flip with Comcast to a substantial profit. Do you see streaming doing the same flip to a substantial sustained cash flow?
I think it will be very profitable. Clearly, people are more comfortable watching things on their computers and then on their televisions. And as we now know, people are cutting the cord, so to speak, on their cable TV subscriptions. People are going to streaming, and I think that's the future. The only thing is that when you're in the investment world, you say, okay, this is the future, but what's the future beyond this? What's after streaming? Sure, clearly there'll be something beyond streaming. I don't know exactly what it is. But right now, I suspect it's mobile streaming and things that you're going to be able to watch on your mobile devices that'll be even better than what we have today.
David, thank you so much. Greatly appreciate it. Just really,
appreciate it.
Really interesting. I just find just wonderful, Lisa, how he does this with so many different things. I haven't watched Bridgerton, but I have full report from family members, Lisa, that Baroness Featherton is just simply trouble. I mean, there's no other way to put it. I mean,
it's a great show. It's addictive. All of her work seems to be addictive, and she's coming, into her own and really a behemoth at a time when content is king. And the reason why I go back to that is exactly to your point about streaming, which is, do you A, have to craft shows differently for streaming, and B, how do you win the streaming wars when there's so many different series coming out? How do you even advertise? I mean, honestly, you talk about the profitability. How do you get a critical mass enough to really drive that forward?
And I'll take it over to news, where you've got CNN Plus coming in and NBC announcing, I believe yesterday or the day before, some form of 200-plus employee streaming effort. Lisa, all of this is great, but I don't understand where the revenue is. And somebody like Moffat and Nathanson, they're the pros. That's the question they bring up.
Although, on the flip side, you look at the likes of Apple. We've been talking about them all morning. We've been talking about how they're trying to become a services-based company. Yes, Tom Forte was talking about building up that internal capacity for media. However, if you have the content, they will come. We saw that with Disney Plus. We've seen that with Netflix time and again. There's a question of how sustainable that is going forward. But really, really, if you have what people want to watch, this is the new model. And so you do think, that is an inherent profitability, if not, in outright, frankly, being sold.
Our new model's the old model. Smart conversation on the Fed today, Lisa. We come up here. I'm in the camp where it's first do no harm. He's going to just try to get through this with a minimal harm. Where are you?
Yeah, well, you tried very hard to make it sound incredibly interesting. It's July. He's going to shock everyone. I mean, I think that no one's expecting him to do much. But I think that what I'm curious about is the market response. If he holds tight, do we see yields rise because people think that the Fed is going to be behind the 8 ball and that inflation is running faster than they're acknowledging? And I think that that's a very real consideration.
Better than the angst of a few days ago. Real yields fractionally better than the depth seen 2 days ago. The 10-year real yield, a stunning negative 1.12%. I wonder if that will come up in discussion. The 10-year yield, well, it's a little bit elevated here, up 2 solid, make it 3 basis points. 1.27 lifts it off the Pharaoh low that we've seen. Bitcoin, we had a 40,000 print when I walked in the door this morning. Maybe Bitcoin will come up as well. Futures up 5, Dow futures up 13 as well. The VIX 18.81. Please stay with us. Our Fed coverage this afternoon. Tom Wheeler at 12 noon. This is Bloomberg. Good morning.
Billionaires in space?
What defines going to space?
There is a level where you
It's
get
the common line?
It's a common scientific theory. 53 miles, 62 miles.
I think that it's just being able to float around and then suddenly you feel like you can say you've been to space.
Zero gravity.
Zero gravity.
Surveillance correction right now. John and I went to Wikipedia. The Kármán line, John.
Yeah, the thing that I mentioned and you carried on talking and ignored me.
Stay grounded with Bloomberg Surveillance, weekdays on Bloomberg Television and Radio.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
For the people here on Earth who are wondering why are we investing all this money in space, this time in space, talk to us about how you believe this will actually help benefit us here on Earth.
We're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Live from New York City for our audience worldwide. Good morning, good morning. It is Fed decision day, and we are 30 minutes away from the opening bell. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Ferro.
From New York, we begin with the big issue, looking ahead to Chairman Powell.
So it's all going to be about the press conference.
Jay Powell.
How does Chair Powell talk about the actual discussion around tapering?
Everything points to the Fed tapering during 2022.
It would be a surprise today if the Fed were hawkish.
I don't think we're going to get the same amount of sort of fireworks.
The Fed is dealing with fundamental uncertainty.
There's this new uncertainty around how the Delta variant...
Tremendous uncertainty.
I think there's a fine balance.
He'll try and be very cautious, very centrist. Low expectations. The number one thing.
We need the Fed to sort of clarify
Clarity and understanding of what on earth their reaction function is.
the reaction function.
But I doubt we'll get any of that.
They'll probably stay cool for now.
Jay Powell wants this to be a pass. He wants this to go off without a hitch.
Isn't that always the way? Jay Powell wants this to go off without a hitch. Joining us now to discuss is Nuveen's Tony Rodriguez, Morgan Stanley's Matt Hornbach, and Bob Michael at JP Morgan. Gents, let's go through it one by one. Bob, first from you. What do you expect today, if anything at all?
Well, it's not what I expect. Here are the three things I want to hear from the Fed. One, I want to know more detail about how they assess inflation. They're telling us it's transitory. Well, lay it out for us. What does transitory look like to you? Where do you think it's going to settle? Secondly, I want to know how the surge in the Delta variant has impacted their thinking. Has that shifted anything? And then finally, of course, I want them to lay out the tapering schedule. I want them to say that either at Jackson Hole or the September meeting, they're going to start talking about tapering, and they expect to start in January. I have confidence on the first two asks, not so much on the last.
Sounds like a lot to ask of the market fairies. Speaking of the market fairies, just quickly, this coming out of China. China convening the banks in a bid to restore market calm after the rout. That just coming out of China. China convening banks in a bid to restore the market calm after the rout. The plunge protection team getting together in the world's second largest economy, it seems. I want to bring you into the conversation, Tony. Your take on what you're looking for today.
Well, good morning, Jonathan. Good to be with you. So I agree with Bob that those would be great things to hear. I think that, unfortunately, we're going to be disappointed. I think that this meeting is really all going to be about maybe some possible subtleties that we hear in the press conference. But I think they're trying to walk the tightrope between not sounding overly concerned about inflation and therefore prompting hawkish response by the Fed, but at the same time, not sounding overly concerned about Delta variant and growth risk, despite some of the weakening we've seen in some of the data. So I think they're going to try to continue to walk that tightrope, which allows them to, I think, still be very patient, which is ultimately where they'd like to be. Hopefully, we will hear some of that subtlety to convince the market that the Fed is going to be responding to potentially higher inflation if, in fact, it isn't temporary or transitory, but at the same time, not going to kill off a recovery if, in fact, the Delta variant becomes a little bit more of a headwind than we currently expect it to be.
Matt Hornbach, plenty of reasons here building up to take a punt at this meeting, but that is a difficult balance to strike here that Tony describes.
I think ultimately what you're going to end up hearing from Powell is confidence that the progress the Fed is looking to make through the balance of the year is on track. The data that we have gotten outside of the pandemic-related data has been very strong in the United States. A strong payroll number from the last June meeting. We had a strong inflation report. The data has been strong. And Powell, I think, has made it pretty clear, starting at the April FOMC meeting, that the Fed's reaction function today is really levered much more to realized data when it comes to their tapering plans than anything else. Of course, the Fed has views on how the data will play out. We heard from Powell in June that they thought the labor market would continue to be strong over the summer, and so far, so good. We've also heard that they expect inflation to be transitory. Of course, they have views on these things, but the reality is it's the data itself, how it comes in, is what will determine their reaction. And it's been good. So we expect Powell to strike an optimistic tone today.
Looking for more taper talk. This is what Priya Misra of TD had to say on that. Take a listen.
timing, pace, composition. We think the discussion has just started. And I think the uncertainty is very high. There's a fine balance, which I do think Chair Powell is going to try and walk, which is an optimistic economic outlook over the rest of the year and beyond, and yet very patient on the exit.
They've been very patient all along. Let's bring in Michael McKee for more. Morning, Mike.
Good morning, John. Well, you look at what Matt Hornback just said about the data coming in. And the question is, do we have enough data for the Fed to start making decisions? You take a look at what's going on with the number of COVID cases and inflation. They're both going in the wrong direction. Is COVID a threat to growth? Is inflation a threat to the economy? They're going to have to walk a little bit of a fine line on that, especially on inflation, because it's come in faster. They've acknowledged it's come in faster than anticipated. You look at the statement, the last two meetings, they've said inflation has risen, largely reflecting transitory factors. But then in Jay Powell's testimony to Congress last week, he said inflation has increased notably and will likely remain elevated in coming months before moderating. So what does that do to the timetable? What does that do to the T word, transitory? Consensus is that we're not going to get a whole lot of action at this meeting, and you guys are talking about that. No change in rates or rate guidance, of course. More talk about tapering, but I'm afraid Bob Michael's going to be disappointed. No guidance on when, although he'll get asked.
By you, maybe, Mike.
They will acknowledge inflation and talk about perhaps a bit of a downside risk from the COVID Delta variant. But the idea, and I think Priya and others said this, is for Jay Powell to get in and get out without affecting the markets right now, because they're not ready to make a decision. They want more data.
Get through Jackson Hole and get to September, maybe. Mike, thank you. Going to catch up. You'll hear a lot more from Mike McKee through the day on Bloomberg TV and on Bloomberg Radio. Even if I could tell you exactly what Chair Powell would say today, even if I could tell you word for word what was in that statement, could you tell me where this market would be off the back of that information? And that's been a tough spot for everybody operating in financial markets. Take a look at the bond market, 2s, 10s and 30s. We're set up as follows. Your 10-year yield right now, 126.60. Yields higher on the day by 2 basis points. But since the last meeting, we've come down from 157.54 at the close on June 16th. Bob, Mike, I want to bring you back into the conversation. How difficult is it to get a read A on this Federal Reserve and B, understand what it means for this market?
Well, I think the two are heavily linked. And when you look at where the level of yields are, I don't think any active bond investor thinks that minus 1 1/8% real yield on the 10-year Treasury makes any kind of sense in this market. This is all a construct of Federal Reserve and global central bank policy. If I look at the last couple quarters, at the end of March, the selling energy started to run out. You had a lot of short covering. You had the weight of the central bank buying. You had the weight of commercial bank buying, who have a lot of reserves, and you had money coming in from overseas. And now I think we're going to see some buying exhaustion. So I don't know where we settle, maybe around 1 3/8, 1.5%, until the Fed tells us in earnest they're going to start the normalization process.
Matt Hornback, same question to you.
Yeah, John, we agree with Bob. I think that the focus of the market today on the 10-year yield hitting 1% rings very similar to the focus of the market back in March, with the 10-year yield trying to hit 2%, right? It's extended. And our view is that, over the past month and a half since the June FOMC meeting, the real question the market needs to ask is, are we closer to the first tapering or are we further away? If you look at the market price today, it suggests we're further away than we were in June. And that's not consistent with the data that we have seen. We think we're closer to that first taper, and therefore we think yields should be higher. So we are looking for interest rates to push higher, and we agree with Bob. We think somewhere around 1.5%, 1.6% in the near term is a very achievable target.
Tony, do you agree? 1.5 to 1.6 from the 126.77 we're at right now?
I do think that's far more likely than 1% or below. We think we will move in that direction. We actually think that we'll end the year closer to a 1 3/4 to 2% range for the 10-year, because we do think that a lot of this is a result of the factors that Bob mentioned regarding central banks, liquidity, short covering, et cetera. So we think as the data plays out, particularly post-September, when there's a little less noise in some of the data, particularly around employment, you'll begin to see that while growth probably peaked in the second quarter for the U.S., it's still going to be at a very high level, and therefore justifying something much closer to that 1.75%, 2% area than 1.25% where we sit today.
The consensus view seems to be there are a ton of reasons to take a punt in this meeting and just take a lift and move out to September and wait. This is the view on the Delta variant. It comes from the CDC director, Dr. Rochelle Walensky, saying even fully vaccinated Americans should go back to wearing masks indoors where infections are soaring. I want to bring in Katie Lyons, gents, to get more on this. Hey, Kaylee.
Hey, John. Well, it feels like a giant step backwards, doesn't it? Here in New York, where you and I are, this is among the places where people who are even vaccinated are being told they have to put their masks back on. The same goes for LA and for many other areas of the country where community COVID transmission is substantial or high. That's based on the number of cases in the last 7 days per 100,000 people. And CDC data shows nearly half of U.S. counties are experiencing high levels, as are 21 states, and another 18 states have substantial levels. This, of course, is as cases are rising due to the number of more transmissible Delta variant cases and the stalling vaccine rollout here in the U.S. They just weren't counting on this many people still remaining unvaccinated and vulnerable. The question now is whether those higher cases lead to a pickup in hospitalizations and deaths. Over the course of the pandemic, cases have lagged deaths by about 3 weeks, but we'll see if there is that pickup in deaths or if vaccinations keep the mortality rate lower like we have seen in the UK. And while we wait and see how those trends take shape, it is having an impact on the market. While reopening stocks like hotels, airlines, and cruises had been outperforming stay-at-home stocks by a wide margin throughout the spring, that gap has almost entirely narrowed, and that basket of stay-at-home stocks has been pretty steadily gaining since May, John.
Kelly Lyons, thank you. Jonathan Gollum weighed in on some of this. Credit Suisse discussing the outlook for the post-pandemic macro environment. Take a listen.
This is going to be a longer process of reopening. It's going to get dragged out longer. Ultimately, the Fed's read that this is transitory is just right. That in 2 years, 3 years, 4 years, whenever we're through with all of this disruption coming out of the pandemic, that we're going to have a slower growing, lower inflation economy.
Bob Michael, a lot of these arguments seem to center on the supply side of the economy responding sometime soon, perhaps September, maybe beyond. Nouriel Roubini joined us on the program a little bit earlier this morning and made the argument that maybe the constraints there will persist in a way that people don't anticipate. What's your base case for how that's going to play out, Bob?
Well, I think you have to look very carefully at what the labor data looks like and make sure that jobs continue to increase. And at least that resource side of the economy, the labor market, continues to grow. I'm a bit more optimistic than Nouriel. I think what we're seeing is that this isn't last year. We now have global economies that are learning to operate during a virus and under a pandemic. And I look at the UK, your homeland, for example, where infection rates are now coming down after a pretty sharp spike, and the reopening continues apace there.
That's the JP Morgan view of the world. Matt Hornback, I wonder if that resonates with you. We're seeing a case study play out in the UK right now, and cases are starting to trend in the right direction. It seems to me that this takes somewhere between a month, a little bit more, to play out. Once you burn through it, things get better. Can you look through this recent surge and say that things will get better from here?
John, we can. In fact, if the U.S. experience plays out in a similar fashion as what we've seen in the U.K., we would expect cases in the U.S. to peak in late August, early September. That actually coincides with the middle of the back-to-school season, which is one factor that we expect it to go smoothly, first of all, but as it proceeds without disruption, we think that the labor market data will continue to come in strong, and the bond market will have to respond to that, we think. That reopening season for the schools also ends right when the Fed comes together in the middle of September to provide us with their projections for 2024, which we also expect to be pretty optimistic, John. So ultimately, we do think that things are looking bright ahead, and we think the bond market will be reflecting that by the end of the year.
Tony, final word.
Well, we agree that we're optimistic about things getting better, but we do think it's not going to be an overnight turn on a switch. It's going to take a little while across multiple segments of the economy, and that, we think, plays into the Fed's patience, and for the market means that while rates are going to rise from here, they're not going to rise aggressively, and there's still going to be a pretty aggressive search for yield amongst investors and that's going to be pretty supportive for broader credit markets.
Tony Rodriguez alongside Matt Hornback and Bob Michael sticking with us. Let's get you some movers ahead of the opening bell at the market desk. Here's Katie Greifeld.
Hey, John. Well, pre-market, it's all about big tech earnings. Apple posted a record quarter last night, but the company failed to provide guidance, and that's spooking shares a little bit this morning. Alphabet, though, is your runaway winner thanks to a jump in ad sales. That won praise from Morgan Stanley and JP Morgan. Microsoft also posted big numbers, beating estimates for a 10th straight quarter, but some caution around its cloud business is capping gains. Meanwhile, Chinese tech is green across the screen. That's after Chinese state media sought to reassure investors, and it looks like it's working, John, because Alibaba, JD.com, Baidu, and Didi are all set to open higher this morning. But I don't need to remind you that it's been a brutal run for Chinese equities, with the Hang Seng Index hovering near a bear market. But turning back to tech earnings, traders are zeroing in on forecasts. Juniper Networks falling after giving EPS forecasts below expectations. And it's a similar story with Spotify. The streaming service added fewer users than expected, and its forecast for overall 2021 user growth disappointed. Teladoc also falling pre-market, with analysts worried about slowing growth to come, John.
Katie, thank you. Coming up on the program, big tech reporting blowout results, but signs of slowing momentum and decelerating growth emerging. That conversation is next from New York. This is Bloomberg.
Week on Bloomberg Green, the rise of green finance.
What we're trying to do is to have a positive impact in every investment and to future-proof those investments.
2021 is the year of sustainable finance, but how do we make sure that all of this money is as green as it's supposed to be?
We know the direction is clear, but the road will be bumpy.
The European Union lays out the green standard for bonds, tightening up rules for banks on climate change.
We see a real link between the impacts a company makes on workers and society and the community, but also on climate and the environment, on the long-term financial value of these companies.
And turning money into motion, the story of how one small activist investor took on an oil giant. I'm Danny Berger in London, and that's what's coming up on this week's edition of Bloomberg Green. Catch it on TV, Quick Take, and online.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
For most of my companies, I'm valuing on a discounted cash flow basis, as is the case with Apple, for our 175 a share price target. But from a multiple standpoint, to the extent that Apple has a larger percentage of recurring revenue, which has been one of the keys also on the higher margin revenue for their services effort versus even their high margin hardware, we've seen an increase in the PE that investors are willing to pay for the stock. And yes, it could go even higher if they have a larger portion of sales that are recurring.
Big tech delivering another record quarter, but C-suite commentary raising some red flags. Apple's CFO tempering growth expectations, saying the following, quote, "We expect the foreign exchange impact on our year-over-year growth rate to be less favorable, our services growth rate to return to a more typical level, and supply constraints during the September quarter to be greater than the June quarter. For more on this, back with us, here's Kaylee.
Well, John, for the second quarter, the trio of mega cap results we got after the bout last night were really quite stellar, handily beating expectations on both the top and bottom line for Apple, Alphabet, and Microsoft. Apple posting 36% revenue growth driven by demand for iPhone, 62% for Alphabet driven by a rebound in digital advertising, and 21% for Microsoft, though growth in its cloud computing business did slow on a constant currency basis. The question is, can these companies sustain this pace of growth? And at least for Apple, as you said, the answer may be no. Sure, it posted its highest sales for a spring quarter ever, but the company warned things may slow down from here. It didn't provide any firm forward sales guidance and said that chip shortage is going to affect the iPhone and iPad in the current quarter. It also warned services demand may slow down too. So that's a concern here, John, is that the forward picture just isn't quite as rosy. Analysts are expecting profit growth for tech companies will decelerate from here, while as a whole, the S&P 500 information technology sector is estimated to post earnings growth of about 34.5% in this second quarter. That's expected to slow 22% in the current period, 11.4% in the fourth, and then in the first quarter of next year, when the comps get a little bit tougher, John, profits are only expected to rise about 3.8%.
Kelly Lyons, thank you. Back with us is Nuveen's Tony Rodriguez, Matt Hornback of Morgan Stanley, and Bob Michael of JP Morgan. Gents, if you take a look at Apple, take a look at Alphabet, and Kelly did a wonderful job of going through the numbers. Let's look at Apple. Looking for decelerating growth, one, and two, what else are they looking for? Supply side constraints to persist. Now, I know you can't do single name stocks, Bob, we're not going to do that, but I think those two themes are two themes that people are thinking about even in the bond market. Growth decelerating. The rate of change. Bob, how important is that? You and I have gone over this before. Rate of change versus cumulative gains. How do you think about those issues?
I think the slowdown in the rate of change is a lot of hooey. I think it's the aggregate level. And of course, you can't continue to grow at 30, 40% a year. It's preposterous. But what level are you going to slow down to? And by the way, the only reason they're worried about supply side constraints is because they have a lot of end demand that they're trying to fill. So the consumer's not going away. I think it's a microcosm for the broader U.S. economy, where we expect the output gap to be closed by the end of the year. And then you're going to have a couple of years where the U.S. economy is going to be operating above its long-term potential, and that's inflationary.
Matt Hornback, your view?
Bob and I are on the same page today, for sure. I mean, we think that the economy is going to do just fine. To me, one of the interesting comments I wanted to pick up on from what Kaylee was saying is on services demand. You know, that is, in our view, the open question here. You know, prior to the pandemic, the trends that we saw in place for goods consumption and services consumption would suggest that we're actually at a level today that's pretty consistent with where those combined trends would have had us were it not for the pandemic. But within that overall spending picture, there is a huge divergence between goods consumption, which is running well above trend, and services consumption, which is running well below trend. So this idea that ultimately as goods consumption comes back down to trend, will services consumption move up to trend? That is, in our view, the real question here. And the comments from Kaylee suggest that maybe there is some downside to services consumption. That's something that the bond market is probably wrestling with at this point.
Tony, just quickly, are you on the same page as Matt and Bob here?
I am. In fact, a bigger risk would have been if we continued to grow at 8 to 9% like we did in the second quarter. So I think the moderation is good, and I do think we end up at a level that is still above potential growth, which is solid for, you know, corporate profits, credit markets, et cetera.
Tony Rodriguez alongside Matt Hornback and Bob Michael sticking with us. Coming up in the morning calls and later, three of the world's largest companies reporting blowout results, giving way to concerns about slowing growth. That conversation still to come with Principal Shima Shah. Looking forward to that. From New York City, this is Bloomberg.
markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Five minutes away from the opening bell in New York City this morning. Good morning. Equity futures up 7 on the S&P, advancing a little more than 0.1%. That's the price action. Here are the morning calls. First up, RBC raising its Microsoft price target to $360 after earnings. The analyst highlighting the company's exceptional guidance and improving margins. Your second call from JP Morgan raising its Alphabet price target up to $32.50. The analyst expecting strong advertising trends to continue. And finally, Goldman Sachs raising its Apple price target up to $140. The analyst seeing robust demand for products and strong execution despite substantial supply issues. That stock is negative a little bit more than 1%. They are three of your calls. Some good news maybe for some of the airlines. The UK confirming the plan for US and EU arrivals to skip quarantine. No reciprocal arrangement, of course, with the United States and the UK, but the UK confirming that plan just moments ago. From New York up next, the focus turning to Facebook and Amazon following some big results from big tech. This is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday.
Traders, are you ready to trade Bitcoin? I'm going to place an order to sell short Bitcoin. The price I'm looking to sell, 39,916. Okay, the price I'm looking to sell, 39,916. So if you're looking to trade Bitcoin, please do so. Please place an order and wait. We still have time, so you still have time to place an order and we will see this time, these days, Bitcoin kind of volatile. So we trying to place order away from its price because it can move rapidly up, down. So many people like to trade Bitcoin these days. Okay, guys, I'll speak to you later and stay safe.
Of 1%, we advance about 34 cents to 71.99. Let's call it 72. That's your cross-asset price action this Wednesday at the market desk with your movers. Here's Casey.
Hey, John, well, let's check in on the big three reporters from yesterday. Apple opened lower after not providing guidance and warning of supply constraints, but it's clawing back some of its pre-market losses. Alphabet rallying after what Barclays called an advertising smash fest yesterday, and Microsoft also gaining out the gate. Its cloud business was a weak spot, but still sales and profit beat. Moving on to today's earnings, though, Boeing posted its first profit since 2019, and if that gains hold, it'll be the best earnings reaction in over a year. General Dynamics also jumping after beating estimates. And moving on to pharma, Pfizer boosted its vaccine sales forecast. That's helping out the stock, even though its non-vaccine revenue growth missed estimates. And Bristol Myers Squibb, well, it's just about flat despite beating. But John, we have to end on Bitcoin because it's flirting with $40,000 again, and it's up for an 8th day, which would be its longest streak this year. As you would expect, that's fueling crypto stocks higher with your miners and MicroStrategy all rallying this morning, John.
Katie, thank you. Appreciate it. Thank you very much. 90 seconds in, your equity market positive 0.2% on the S&P 500. Bottom of the pile, consumer staples down 1/3 of 1%. Top of the pile, communication services up by 1.5% on the S&P 500. You would have to think Twitter snapped last week. Yesterday, we had the likes of Alphabet delivering some stunning revenue growth. You would have to think the bar is higher for the likes of Facebook. With the numbers that look ahead, here's Katie Lyons.
John, Facebook, one of two of the big five we still have left to report. Of course, we got 3 of them yesterday, and the trio of mega cap results we got out from Apple, Alphabet, and Microsoft were truly phenomenal. The 3 combined raking in $57 billion worth of profit in the June quarter. Microsoft with $16.5 billion, Alphabet $18.5 billion, and Apple nearly $22 billion in profit, and all, of course, handily exceeded already elevated expectations. For Apple, the big driver was the iPhone, which saw growth of 50% in the period, but that picture may change going forward. The company warning that both the iPhone and iPad will be affected by supply constraints in the current quarter. Basically, the chip shortage is hitting where it hurts, with chip lead times now at a record of nearly 20 weeks. That's less of an issue for Microsoft, which is focused on cloud computing as a growth driver, and Alphabet, which is benefiting, as you said, from that boom in digital advertising sales as the economy reopens. YouTube revenue up a whopping 84%. So that sets the stage for Facebook later on today. Will it reap the same kind of ad spending reward that we saw with Alphabet and, as you say, Twitter and Snapchat? And then, of course, after Facebook today, we still have Amazon on deck tomorrow. So a lot of weight yet to report, John.
Kelly, thank you. As Kelly points out, Facebook after the close a little bit later, then Amazon after the close tomorrow. We caught up with Invesco's Brian Levitt recently, weighing in on the outlook for growth versus value. Take a listen.
We're going to moderate to a more sustained level of growth over time, similar to what we saw from the middle of 2011 through the end of 2019. And in that environment, value stocks didn't do terribly, but growth stocks did outperformed. And that's because investors are looking for structurally advantaged businesses that can grow in what's, in my opinion, going to be continue to be a slow growth world.
Let's bring in Seema Shah, shall we, of Principal Investor. She joins us now over the phone. Seema, good to catch up with you again this week. To Brian Levitt's point, we're going to go back to a slow growth world, and in that world, you want to own these big tech names. Do you agree?
Oh, totally. This is the time as we get past the pandemic, get past all of the fiscal monetary support, that really you need to know which companies that you're investing in. Do they have very strong balance sheets? Do they have a strong customer base? And I think what we're seeing with the big tech, they're proving again this week, is that's exactly what they have. They've got the positive cash flow. They've got that strong balance sheet. And most importantly, they're part of that secular growth world where businesses are absolutely dependent on technology going forward.
Seema, what do you make of the analyst community? I'm not asking you to insult them. I just wonder, every single quarter we seem to be doing every single time the same thing. We look at these numbers, they come out, and they just blow past earnings estimates. Why are we struggling to get a read on the underlying business, the performance of them, every quarter?
Yeah. It's a good question. I think we've all asked ourselves that many times over the last few quarters. We just start to almost look beyond a lot of that. We start to think about our own fundamental views of, the question marks that we get from clients is mainly like, with these kind of extended valuations, do we really think that big tech can continue to outperform? And I think the proof is in the pudding. They just keep delivering. And we almost have to put aside some of those analyst expectations, which, by the way, it's not just for big tech, it's across all sectors. We continue to see this kind of trend. We're looking at this, we see, we had some pretty favorable, of course, base effects for other sectors. Big tech didn't. Big tech had already been doing well last year. So I think it's very difficult to deny the strength going forward of this sector.
Seema, I often ask this question just to get a very, very quick view on an individual's view of the world, and it tells me a lot about what they think about other things as well. The NASDAQ 100 or the Russell through year end, is it the NASDAQ for you? I caught up with Bob Dole earlier this morning from Crossmark, and he went with the Russell. I assume you're going with the NASDAQ.
I am. I think it's a really important part of any portfolio. It's a part of defensive positioning. If you have any concerns about global growth, about where bond yields are going, NASDAQ will do well. If you've got any views on secular growth going forward, well, NASDAQ is housing those big tech. So from our perspective, it needs to have an allocation within your portfolio.
Seema Shah of Principal Global Investors. Seema, good to catch up. Thank you. Still with us, Tony Rodriguez, Matt Hornback, Bob Michael. Bob, let's start there. The return to trend growth. This conversation is a big part of any committee talking about financial markets right now, how quickly we go back to those kind of numbers. Goldman out earlier this week, Jan Hatzius and the team indicating that they think in the second half of 22, we go back to 1.5 to 2% GDP growth in the second half. Would that be in line with your thinking too, Bob?
I think we're a little bit more optimistic than that. I think because of the amount of fiscal stimulus that we've seen come out of the U.S. in particular, and then when we look at the Fed's commitment to maintaining such accommodative monetary policy, you have to wait and see how that plays out and the willingness of companies to invest in CapEx. And it looks like they're going to use some of their profits to do that. So we think we'll operate above that 2% threshold the back end of next year.
Matt Hornback, you and the team over at Morgan Stanley have taken the view that this cycle is shorter and it burns hotter. How does that reconcile with this view that we go back to trend by the end of next year in the back half?
Well, John, I think it's actually pretty consistent with the idea that growth can sustain at a higher level for a bit longer than what Goldman is calling for in their forecasts. We have growth sticking up above 2% as well through 2022. And importantly, and Bob alluded to this, that fiscal stimulus is not yet done in the United States, we think. We are still expecting a $4 trillion top-line spending program relating to various types of infrastructure to be signed into law at the end of this year, John. And that type of spending, which we believe will be front-loaded, something that's both consistent with history, but also consistent with the political calendar, is something that we do believe will sustain growth at above trend levels through 2022.
Tony, just to build on this and everything Matt and Bob just said, how much longer do you think above trend growth can persist?
So our view, Naveen, is that we're going to see above trend growth in 22 and in 23.
Wow.
So when you think about the fiscal stimulus that still might be coming down the line, we think about accommodative central banks, the ECB and the Fed in particular. We don't see a tightening by the Fed until early 23, probably. And we have a consumer that's going into this kind of recovery period with one of the strongest balance sheets we've ever seen. So that spending power, and we think that continued accommodation, both monetary and fiscal, supports an above trend growth. Decelerating from where we are today, we do think we peaked in growth in the second quarter, but still above trend growth in both 22 and 23.
We've talked a lot about the United States. We need to talk about China too. Some news out in the last hour. Let's bring in Bloomberg's Katie Greifeld for more. Hey, Katie.
Hey, John. Well, let's start with consumer earnings because Shopify was a bright spot after reporting profit more than double forecast, but it's falling now. And it's not so rosy down the screen either. You have Starbucks and Mondelez both dropping early and Spotify leading losses after forecasting slower user growth. And let's check in on where we are a little less than halfway into earnings season. Year over year EPS growth, it's holding in at about a 100% improvement, and nearly 90% of companies so far have beat on earnings. earnings, but still your average stock is just up 0.4% the day after. And John, let's end on those Chinese stocks, because what a bounce back. Even education stocks up this morning, despite Beijing's crackdown just this week. Of course, this is after state media talked up markets last night, following just a brutal stretch for Chinese shares, John.
Katie, thank you. Let's reiterate that headline that came out about 40 minutes ago. China convening banks in a bid to restore market calm after the rout we've seen develop over the last few weeks. Bob Michael, I want to come back straight to you and get your thoughts on this. I think a lot of people wake up stateside, and I've talked about this repeatedly through the week, and they wonder what this means for me, for us, for you, if you're an investor in America. Can you think of the dominant transmission mechanism for the pain we're seeing emerge in China to bleed through more globally, more broadly through markets?
Yeah, in fact, we had a pretty big discussion on this yesterday with Howard Wang, who's our equity investor in the region. And he calmed a lot of people down, because you do get concerned that perhaps a lot of what you're seeing out of China could start to percolate into other industries. And he pointed out, this is typical China, that they invest a lot to get industry started and up and running. And then as these companies start to grow in size, they tug on the reins a bit and try to find the right balance of regulatory versus growth. And I think the markets are now coming around to realize that we do expect things to stabilize in here.
That's the question, Bob, and I think it's the right one. I'll ask it of you, Matt. Does a regulatory risk turn into a growth risk? And is it something we should be concerned about?
Well, John, we don't think this is similar to the situation that we saw earlier this year with China tightening and people growing more concerned about growth. I would, again, concur with Bob that at the end of the day, the technological progress that's happened in China has been so much faster than the regulators were able to keep up with in real time. And this is just part of the evolutionary process of technological change. Yes, regulators are going to get involved, but we don't see it as that big of a risk to our growth outlook in China or the rest of the world.
Matt, you and Bob agree on everything. Tony, have you got a different view, or do you agree with Matt and Bob?
Generally, I'd say I agree with that, although I guess I would say that we do think that a policy error in China is a risk that investors need to certainly take into account, because it is a managed economy. They do have areas of the economy that right now are excess capacity. There's excess capacity. There's maybe too strong growth. There's too much debt. And so managing that from a policy perspective, we think introduces significant potential risks. Ultimately, we think it'll play out reasonably well, so we'd be in agreement. But there is certainly a risk premium that needs to be factored in as a result of policy, potential policy risk.
Tony, just quickly, where would you expect that to show up? Through the FX channel, through credit? Where would you look for it?
Yeah, I think that you'll see it through credit in the domestic markets in China, through the FX channel affecting kind of more global capital markets. And we're already seeing that in terms of the local credit markets in China.
Just a few cracks starting to emerge. Gents, before I let you go, just a final word. News conference a little bit later. You know how this works. Chairman Powell opens up, delivers a statement, then the Q&A starts, and you wait until the very, very end to hear from Michael McKee. I have no idea why that happens, but it happens every single meeting. Michael McKee gets to go last. Don't know why. Bob, if you got to go first, what would the question be today for Chairman Powell?
No. If Michael McKee doesn't go last, the karma in the markets gets destroyed. He must go last. And because he's going last, he has to ask a very punchy question. And the question he needs to ask is, who exactly is the Fed trying to help now with the continuation of these overly accommodative policies? Borrowers have already been helped. Businesses, households, and every level of government have been able to fund themselves at record low funding levels. But savers have been penalized. And it's not just the consumer, it's the big pension funds, and it's the insurance companies. They've got liabilities that they've got to cover through the bond market, and they need yields a multiple higher than where they are now. What does he think about that?
Matt Hornback, what about you?
I would be asking the chairman about how exactly is the Fed thinking about substantial further progress? You know, this is something that everybody wants to know the answer to. They've had enough time to figure it out. They should be more transparent about it instead of leaving it just up to their whims at any given meeting. How are they defining substantial further progress? Inquiring minds want to know.
Tony, final word.
Substantial further progress is one, and also what does either transitory or temporary mean to them from an inflation front, because that gives us a great insight into when we're going to see the first tightening.
The pressure's on Michael McKee, and the fate of the market is in his hands. Matt Hornback, Bob Michael, Tony Rodriguez, good to catch up with the three of you, gents, thank you. Coming up on this programme, with the August recess looming, US lawmakers edging closer to a deal. That conversation is next. From New York City this morning, good morning. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y-12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance, and more.
2022年完成空间站的在轨建造，建成国家太空间之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station.
出发，是，敬礼。
China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
We're making good progress on both tracks, the bipartisan infrastructure bill and the budget resolution with reconciliation instructions. The number of issues has been narrowed significantly. If an agreement can be reached, and I'm very optimistic and hopeful it will be, senators should prepare to work through the weekend.
Racing against the clock to salvage a bipartisan infrastructure deal. Senator Mitt Romney striking an optimistic tone as well, saying, quote, the following: there will always be details that have to be worked out, but I'm pretty optimistic at this stage. For more, Bloomberg's Anne-Marie Horden, our Washington correspondent, joins us down in D.C. Morning, Anne-Marie.
Good morning, John. There is a lot of optimism. We're hearing now from Republican aide that a bipartisan deal could be reached as soon as today. And this is really has been, as this working group has been over the past 48 hours, really calling, using all the phones and discussing between the White House, especially Steve Ricchetti and Senator Bob Portman. And Politico had an interview with him, and he was saying, it's me and him talking, but we're going back to our prospective groups to really hammer out the details. Next is going to be, John, if they're able to get a deal, and we should note, this is over a month from when that bipartisan group came out of the White House with President Biden saying that they have a framework, is whether or not the Republicans are going to fully get on board. The Democrats need 10 Republicans to get on board, and we have not yet heard from Senator Mitch McConnell what he thinks of this. Potentially what you can start hearing in D.C. is a lot of Republicans really amping up the heat on why they should vote for this bipartisan infrastructure deal when the Democrats are out and open talking about a two-track for their $3.5 trillion plan.
And this is only one half of the story in Washington at the moment. Anne-Marie, as you know, the other half is what happens with the Delta variant and what to do about it. I've never seen so much confusion over what to do with a mask, to wear it or not, here in New York City at the moment. Waking up this morning, Anne-Marie, I'm not sure it's clear. Is it clear down there to them?
In Washington, D.C., it's clear in the